They tell you the war is over there. They tell you the economy is just a series of disconnected numbers on a ticker. But if you look at the real time supply chain, the sovereign backed infrastructure, and the massive capital shifts happening under the surface, you know the truth. We are in the middle of a silent, high stake war for the future of the Main Street economy. And the map just changed again. With the explicit demand that all nations sign the Abraham Accords as a non negotiable anchor for any regional peace deal, we aren't just looking at diplomatic maneuvering. We're looking at the forced integration of global supply chains. This is a new sovereign floor being laid out in real time. I've been documenting this shift for months. What you're about to witness is not a standard market recap. It's the live documented audit of the More economy, the new operational architecture that is being built and dismantled right in front of our eyes. We pulled some of the most critical archives from our live sessions that you haven't seen. We're gonna put them together, and this is gonna last about 3 hours. So sit back and dive in. So everything you see in these archives is tied to a single proprietary lens, a new framework, the More, M-M-M-O-R-E framework, simply pronounced More, the More economy. We aren't watching this economy that we managed to see before. This is a framework for it. So massive capital outflows, massive capital flows, tracking the largest institutional and sovereign money management, macro realignment. The Abraham Accords could be something that ties right into that if we have more people sign onto it. Momentum, we see a lot of momentum with the AI movement right now. Operations, this ties more into the individual stocks. Realignment, we're seeing a whole lot of realignment across different industries in different areas right now, especially inside stocks and their earnings, which is driving the stock market right now. We see earnings pushing the stock market forward. So this is a framework that many people haven't even thought of. It's actually one I coined, the More framework. So I did a long dive video on that, like almost 2 hours on the More framework if you want to take a look at that. But just think about that when you're looking at all this. This wasn't even coined then, and how it actually plays out today. So once again, the More economy, because this plays into where we're at, where we're going to, and what we're watching. So sit here, take a second. The More economy that we're in right now, the More framework. And let's get right into the archives. Thanks for tuning in. Let's get to it. Sit back and get ready to dive in. Welcome to this live broadcast with Marcus Sturdivant Sr. and Mr. Stephen Davenport. The
Hello, everyone.
global economy is currently staring down at one of the most significant energy and supply chain bottlenecks in recent history. So we look at the 2026 blockade of the Strait of Hormuz. The question is about geopolitics. It's about the economic clock of war. How these disruptions ripple through everything from global inflation to your personal portfolio. Joining me today to decode these institutional shifts is a returning favorite and leading voice in market strategy, Stephen Davenport. Today, we're asking the tough questions. Is the Strait straight? We'll be breaking down the energy crisis, why this blockade is unique and how it could trigger global inflation, the domino effect, our supply chains, disruptions and dispute now, fertilizer, food, and other areas, and then institutional strategy, what the smart money is doing in navigating the risk of private credit and institutional portfolios. Stephen, it's great to have you back. Let's dive right into the mechanics of this crisis.
It's great to be back. I think that when I think about what's happened in the last 2 or 3 weeks, I think it's gone much further than I ever expected it to go. I think that for the U.S. to now be trying to squeeze Iran with their own blockade of Iranian assets and Iranian funds is just taking the enemy's ideas and making them your own. I feel that there's a lot to learn from how you can conduct war without having to really get your troops on the ground. I think that's the main thing that I would say the last 2 weeks have taught us, is that you can enact pain on your opponent just by trying to touch their economic and other assets. So I think that what's happening is just a progression in terms of the type of wars we used to wage and the type of wars we wage now. I think that the banking system, the financial system, the relationships between countries who demand or need the oil, I think the biggest thing that keeps Iran the way it is and has not pushed it further is China is the number one client. And so China being the number one client for Iran's oil, I think they would have something to say and something to do if we were to destroy Karg or do anything to really hurt the infrastructure of the country, because China and Iran have a pretty strong relationship, and China can't find that oil in the same quality, in the same way other places. So I think that they need Iran, and they need Iran to stay active. So I think that overall we know there's going to be something going on here, and it's going to have to involve China. So I believe that the meetings that Trump's going to have with Xi in the next month, he would like to be in a position where Xi could help Trump with moving the Iran closer to a final peace deal. So I think it comes down to the main powers again of the world, in the U.S. and China, and it feels a little bit strange because Iran and the Middle East oil, the U.S. has become energy independent. It really doesn't need to be involved in this, but it finds itself as an ally of Israel, stuck right in the middle.
Gotcha. Yeah, that's a broad take, but not quite as broad. A little concentrated in there. Chris, you just spoke about how we're in different type of warfare now than what people are used to seeing. Uh, the economic impacts are definitely something that we're seeing. Just going, I know back when this war started, I was looking at some data and it was saying how, 6 weeks to 8 weeks after the first shots are fired, stock market's usually higher. The stock market is higher now, even after the pullback today. But historically, that's how it happens. But now let's think about the clock of war, the timetable that we've gotten out here into this 8th week. What do you see some of the lingering effects being if this war is to drag on?
Well, I think that, it takes time for all of these subsidiary uses of oil and natural gas to go through the system. So people had an inventory that they were working through, and now that inventory isn't being replaced. So I think we're going to start to see a greater impact in inflation, a greater impact on some of these companies not being able to deliver any of the products like fertilizer and helium and other byproducts of energy. So I think that we're going to start to see people. I think that the market has looked past a lot, and they've looked past it because they said this will be a short and quick event, and therefore it will cause a spike, but that spike will dissipate quickly once we get the resources back online. Well, we're not getting them back online, and I'm not sure how quickly we are going to see them back online. So I think that the two things that I'd emphasize are, one, Republicans in Congress really need this to be over so they can focus on the midterms and potentially focus on the issue that everybody wants to talk about, which is affordability. Affordability hasn't been addressed, and I think it will be a problem unless we get this over quickly. And the second part of this is, how many of our allies have we burned bridges with? And that'll cost us long term in terms of how we want to operate together against, the axis of evil, as we used to call it: China, Russia, Iran. You might include Nigeria in there. I think that there are countries out there that we look at and we say, we can't imagine how they could be influencing our economy, but they are. And I think that when you look at Iran, I'm sure that, we all appreciate what it means for energy markets, but I'm not sure it should be affecting the US as much as it is. So in my mind, we have to decide, are we really going to let these countries get away with changing the rules and how they operate, Or are we going to try to operate as we have with NATO allies and Canada and Mexico, as we've done for 100+ years?
Gotcha. Yeah. I mean, I don't know if the other countries are changing the rules, right? Are they kind of just adapting to what we've done as we've come in and kind of like increased the American exceptionalism trade that we have going on? I don't know. I don't know if they're just adjusting more. But yeah, come November, it will be interesting. I heard today where the Republicans were looking to push a skinny reconciliation bill through, but it doesn't include a lot of things that they have. So they have a lot of problems going on within their party, as do the Democrats. They have a lot of stuff going on. So our political environment is definitely a thing that plays into this whole axis thing that you were talking about, right? Other countries joining together, they see that maybe America can't even get together within our own borders. As far as being energy dependent, yeah, I think we are like continentally energy dependent. I don't know if America's quite energy dependent. I guess if you take in the Venezuelan oil and, I don't know whose oil that is over in the Strait of Hormuz, but, we do have oil. Can China come buy oil from us? I know, and let's dig a little bit deeper. You mentioned people don't realize the global impact of these things. Generally, they just think about the debt that China and USA have, but what are other ways that this impacts people? Main Street.
I mean, I think when you look at the chip fab and the whole chip industry, I believe that what you've seen here in the Strait of Hormuz, I saw a recent commenter say the next strait that will be an issue is the Strait of Taiwan, and 80 to 90% of certain nanometer chips are going through the Strait of Taiwan. So when you think about Taiwan Semi, United Micro, and some of the capabilities that are in Taiwan, and Taiwan is still battling with China over this idea of whether it's a sub-state or whether it's an independent country. I think that one issue, when you think about the demand for AI chips, and if a country like China were to implement some type of a blockade, I mean, I think they were thinking about blockades, but I don't think they were thinking quite the way the blockade is unfurled at the Strait of Hormuz. And I think that type of action, not involving any troops on the ground, simply, putting your fleet and putting your air forces along to prevent chip fabrication, which environmentally and otherwise, I mean, chips are a huge source of value add. So when you think about disrupting oil, which is a commodity, you can do some substitution of other commodities of nat gas and other things for that capability of oil. You can't substitute a 5 nano for a 3 nano. The chips manufacturer and the chips technology is so critical to these server farms and AI technology that I think the disruption would be significantly more. If we saw a 10% decline because of the Strait of Hormuz, I think we would see a 30% decline if something were to happen in the Strait of Taiwan. So when I look around the world, I look at the way that Russia and the Ukraine have perfected the use of drones. Ukraine has become a force in production, development, and implementation of drones. And now we're seeing them start to help others, like Israel and others, to try to become better at it. And you look at what happens. It's a progression of drones weren't a factor when we had the Iraq war. Now we have Iran, and drones are, I don't know, 80% of the effort around aggression is around drones. And you just look at that and say, this technology and this ability didn't exist 5-10 years ago. I mean, I remember some people, using drones for photos, but in terms of militarily using drones and being able to control and link up with satellites for precision usage, I think that we're seeing a whole new world. And I guess I'd say by energizing drones and by looking at the way things are falling in these different conflicts, the bad guys or any people who are looking for aggression against their neighbor, we're seeing a lot of maps on how to use them and what to do. And I think that's going to make the likelihood or proclivity for more violence between these countries higher. And I think all of us would like to think, hey, what did we learn from COVID? I guess we learned that we need to be more self-sufficient, and you need to have resources doing many different things in your country, because you never know when that partner or that ally is going to change. And when it changes, so does your opportunity for economic growth and other things. So I guess I'd say, Marcus, my worry is we're becoming better and better at using more and more weapons and more ideas of how to hurt and infiltrate and um, overcome another country. So I don't think that's necessarily a skill set that I was hoping, you know what I mean, that 2026 would be the year of drones or the year of economic damage.
Yeah, that's the shift in drone warfare, like you said, Ukraine and Russia, and it's something that we experience over here in the Strait of Hormuz for sure, where you would see, I think we mentioned it last time, where you see $1 million missiles getting taken out by $500 drones or something to that effect. I know since the last time we spoke, I saw a company out west that they're now making 3D printed missiles. So to go to the war effort, we've heard the White House brought in defense companies maybe last week and auto manufacturers to tell them they need to increase production for the war efforts or just for our defense efforts, air quotes for those listening. So you definitely see a move and a shift. And I think Ukraine was helping us with the drone warfare as well, like how to defend against the drone war. So it's just,
Yeah, and I think it's cybercrime also. I mean, I think that there have been some attempts at various cyber activities. And I kind of believe, after CrowdStrike and some of the problems we've seen, our processes and our infrastructure are challenged. I don't think that we are prepared as we should be in some of these areas of cyber, drone warfare, or even what I'd call chemical, because I think there are chances that if you look at what, we're talking about nuclear materials in Iran, and I don't think that we know where they are in terms of delivering those materials, or how far along they've gotten. So it's, to me, what we're seeing is when we push people to the wall, we don't know exactly what they'll do to fight back. And so far, I think it's been mostly clean. But I would say that if it got worse, I think it would start to really disturb things. And the last thing I would say is China has always had a weakness in demand and the need for foreign energy. And I think that in doing so, they've dealt with Iran because they like the idea of buying, oil on these shadow carriers who are not recorded or aren't under the right flags. And that type of activity, they can get a lower price per barrel. They're building up their reserves. I think that just like the U.S. had strategic reserves that were significant, we've had to burn them down and lower them. And so China has been smart in trying to build it up. So I think that all areas, Marcus, are on the table in terms of what's going to happen and how. I think there's been more uncertainty now than there was 2 weeks ago, 6 weeks ago, 8 weeks ago. And I just find that the more we get into this, I think the further and farther and harder it's going to be to get out of it. As we haven't talked about troops on the ground in Iran, but in my mind, there's two major areas that could cause the market to really have a problem. One is troops on the Karg Island, or troops on the ground around the strait, or China ship being either captured or blown up and containing China oil when it's going to China, and it gets not just rerouted but destroyed. I think China would have a bit more of a problem. So to me, that's where this thing could keep going, and I don't like the direction it's going.
Yeah, it seems like the negotiations are very tentative at best, as is this ceasefire, which is very fragile. I mean, shots have been fired from both sides. They're now taking ships from both sides, I think, have been seized. Uh, some have been shot at clearly with missiles or guns, or they've been attacked. Ships in the Strait of Hormuz. And then, like you said, it's just this is we're at about 8 weeks. This thing can stand longer, but the market, like you said, you don't quite understand why the market is not reacting worse. It's like the market has already looked past this. So the market's looked past this, saw the worst case scenario maybe as when Trump said he was going to annihilate a civilization. So maybe that was when, because we saw that was right when it started that 12, 13 straight day move. Want to shift speaking of cyber defense, first on before we shift, I want to say thanks to everyone who's listening, watching. Hit the like button. Let us know where you're watching from. You want to leave some comments. Me and Mr. Steve would be more than happy to answer them, whether it's now or even later after the stream. But let's jump back into this. You mentioned cyber defense inside of this, and that ties into software and the SaaS sell-off that we just saw. Today we saw ServiceNow get destroyed. The IGV actually has been on that. So that's a software ETF for those who don't know. And we're not making any recommendations again, but it's been moving up. But today it was down for one of its worst days in years, and semiconductors continue to grow. Where do you see the AI trade, semi softwares, and the cyber defense? Because the IGV has a heavy concentration with CrowdStrike and Palo Alto.
I mean, I think this is going to cause companies to realize even more that they need stronger defenses. I think that we're going to see some more disruptions, and I think those disruptions are going to, emphasize to people that the enemy is getting stronger, not weaker. And I think that when we look at these countries trying to cooperate together, we've got to know that Russia and China are probably supplying data to Iran in terms of the location of troops and materials for Israel and the U.S. And I think that if we think those, satellites for those countries aren't working for Iran, I think that we're probably kidding ourselves. And I think that when we also think about if China's cyber were to be put for Iran's benefit, I think that would have a significant impact. Russia has a huge cyber force, and I think they would have a bigger impact in this war. But they've tried to stay somewhat neutral, and I think that by providing data, they're already over the line, and I think it's just a question of how far over the line they go. I believe that the battles are going to be fought in the Bitcoin space, and how do you control that, and how do you manage that, and how do terrorists and other people use it to benefit their forces and to you. If we were to see more cyber attacks, I think they would probably be focused on the areas of the U.S. defense system and the U.S. economy. In which case, I think that we have a very large area to guard, because of our dominance in a lot of different spaces, whether it's bonds or equities or commodities. I think there is a pretty large infrastructure here that is going to be very hard to defend when we look at these countries who are now Iran's ability. That's one thing. It's a $92 million person country. But once you get Russia more involved, once you get China involved, you suddenly are really looking at resources that could significantly impact not just the battlefield, but the economic fields.
Yeah, I mean, I think Russia's probably the leader in cyber attacks. They've been, uh, since 2016, people can talk about Russia and cyber and those type of things. And then they're a large country, but I'm not sure how large their population is. They might compare to Iran. So Iran and Russia, they're definitely all intertwined for sure when it comes to those things. I mean, they were given information. But if you're Russia and you have the Russia-Ukraine conflict, the U.S. has done the same thing, right? These are wars by proxy, right? Everything's a proxy war. inside of this?
I think the question is for Russia is, do they have a bigger plan?
Of course.
Do they have a plan for, Poland is next? I think that it is. That's what NATO is really worried about. I think that they've seen the war has pretty much come to a standstill between Russia and the Ukraine. There's certain areas of the countryside that make it very hard for other areas to get taken. And those defensive postures and those positionings, um, you know, we know what Putin wants. Putin wants access to Crimea. He wants to keep that shipping location, and he wants to have an access via land to that. I think that Crimea has been gone now since 2016. I'm not sure this battle was at all about Crimea as much as it was about making it a permanent link to the Russia. And I guess I'd comment about Russia in terms of the population not being as large. I would say in terms of militaristic economies, their economy is pretty well developed in the military and the sciences, such that I think they represent maybe a country that definitely, what do you call it? It definitely fights at a weight much higher than it's scheduled, right? It's a
Punches
much
above
tougher
its weight.
fighter, punching above its weight. Yeah. So I think that overall we don't have I don't think we have the desire to be involved in some of these circumstances much longer. So in terms of the population of the US and how much longer we want to be spending this money on the international wars, I don't think they're going to really, with our debt levels and the amount of money we're paying for interest now, I think there's a serious problem with inflation that would really make and disrupt our ability if we keep spending the money the way we're spending it. I'm hearing that we're getting low on supplies of munitions and that we need to call a ceasefire because we need more time to build back up our resources. So,
Extended. Go ahead. I'm sorry.
no, that's it.
Gotcha. Yeah, I was gonna say extend the ceasefire. We're in the ceasefire, I think. Yeah, very salient points. And so, obviously wanted to share some value to people. We just sat here and talked about the war and how cyber security should be a priority with everything coming. We didn't even talk about the AI aspect of it yet, because AI is just a whole other thing why you probably need cybersecurity. But like I said, we've seen even and once again, not investment advice or recommend any fund, but the BUG, the bug fund, ETF that tracks cybersecurity, that one's had a rough time as well. How would you tell investors from your chartered financial analysis mind, like how would you tell investors what moves they should make right now? Because it seems like you should just invest part of what you have in cybersecurity, right?
I think everyone needs to have at least one exposure to cyber. I think you need to have either an ETF or an individual name with one of the leaders like CrowdStrike. So I think that overall, it's just another type of software that every company and every individual really is going to need. So I think that we should take this downturn in software in this space and say this is an opportunity. I look at the race now with semiconductors again, and I'm kind of wondering if they're being bought up because people think they're. I don't know. I wish and I hope that we're not going to see a replication of what's happening in Hormuz over in Taiwan and Taipei. I think that if there was, I think it would be much more damaging to the global economy, and it would also be much faster because the needs for those chips and those company earnings and everyone's growth forecasts for the next 3 to 5 years are all dependent on semis and nano semis. So I think it's one area where the security of Taiwan is really the security of the U.S. technology sector. And I think that right now, Taiwan is in a dangerous position because I think Xi would like to take the distraction of what's happening in the Ukraine and the Middle East and say, I'll just exert a little more influence back home because the U.S. is down one carrier. They're it's harder now for them to actually support. And one of the mentions was we don't have enough missiles to defend Taiwan now that we've used down our inventory over in the Middle East. So I think that the whole idea of our fleets in our system was we could conduct a multi-ocean war, an effort. We could have an effort going on in the Pacific and an effort going on in the Atlantic or in the Mediterranean. I think what we're seeing now is it's a lot harder to execute, especially when one of those resources, I think they talked about it being a fire in the laundry room, but I think it was actually, Iranian forces that caused it to run out and have to evacuate and get out of the strait. So I look at things and say, we've had some successes with our weapons and our technology, but no war is perfect and no war delivers everything that everybody wants to it. So I think that what we're seeing now is really just a period of thought and reconsideration during the ceasefire, because I think that people have to evaluate how long can you keep fighting and how do you want to keep fighting? Do you want to keep fighting an aerial war? Do you want to keep fighting a war of missiles and cruise missiles? Or do you want to start to progress to a land war? I think the last one is the last thing that we want. I think that overall, Americans polling and everywhere were really against the idea of this leading to ground troops putting at risk. I don't know. What do you think of what do you think ground troops would mean for the markets, Marcus?
Okay, so I think we already had ground troops in there when we went and got the pilots out, and that, the markets were happy that we got our pilot back. But if it was like in there for more than kinetic purposes, we're in there fighting, because I think we'll probably have to put boots in there to get the uranium out, the enriched uranium. I just don't see them just giving it to us. Like, even if they do, we'll probably have to escort the inspectors through there, right, to get the stuff out. And that's going to be some visual effect, for the people in Iran, because who knows what they've been told over there, right? So if they see some American troops come through there, what's been sold, so that could just definitely make it hotter, even if we're in Iran in a quote unquote, air quotes, y'all, peaceful situation, right? So I do think if this escalates, if this stays as it is, and trust me, it's bad, but if it just stays and extends, it'll eventually, in theory, kind of play out like Russia-Ukraine, right? You remember how intense Russia-Ukraine was when it first started? It was on the news every morning. They were talking about Russia-Ukraine, and markets went crazy for a little while. They dipped, they came back up, and it just kind of adjusted to it and went back to earnings, right? Which is maybe why we're seeing these markets move the way they're moving now, because earnings have been really strong in spite of this war, in spite of private credit, in spite of AI, maybe because of AI, I don't know, but earnings have been extremely strong. So maybe we should just shift to what do you think with the market? But to answer your question, because I didn't answer, if we have boots on the ground, like unexpectedly, because you gotta let the message be signal, right? But if there's something just happens and we get a news flash that American troops were in there fighting and or engaged in a battle that the American people didn't know about, stock market's going to crash because oil prices are going to go up. There's been the correlation. I was talking to Jake, and when this first started, he was like, what do you think about the stock market? And the stock market was going up a little bit, but oil prices were also going up. I said, that's not going to work right now. We got to have something that's going to, and this was, a month ago. We got to have that
Yep.
event where the market flushes, even if it's not the deep flush that you usually get. And we have to see the market come up, oil prices go down for a while. So if we saw troops on the ground, those oil prices are going to shoot back up above $120, $150 a barrel. And in turn, I think the consequences would be the stock market would go down. Not one for one, but maybe they'll go down even more and at a much faster pace than we saw at the beginning of this war.
I think the whole verbiage of this being temporary and this being quick and us being out easily has proven to be wrong. So I believe that our understanding of, and it's been a while, we haven't been fighting, actively in different spaces for a while. And you look at us and say, how do you adjust to new technology? How do you adjust to new tools in the battlefield like drones? How do you adjust to cyber blocking? I heard that some of the, what was going on with Iran was it was jamming a lot of the communication devices for anyone who's trying to pass through the strait. So they know what channels they're on, and they would, and you think about that, it seems like a simple thing, but I'm not sure everybody has a clear idea of how narrow it is. It's 21 miles straight, but there's 2 miles in one section that goes in, there's 2 miles in another section that goes out, and there's 2 miles in between. We really only use 30% of the strait to get through. So when you think about controlling that strait, and I saw today there was talk about Iran laying more
Mine.
explosives in the strait, and there were people were shooting at the boats who were dropping off the. I think that Iran is. If we would take the U.S. and Iran and look at ourselves and say in the mirror, who are we? Iran is a century-old, 1,000-year-old civilization. Their religion and their faith and their things, they've been in place for a while. They don't look at things the way the U.S. does in terms of, I really want to release this before Friday's 5 o'clock news hour. That's not the way Iran operates. Iran controls the media, so they don't react to the media. We react to the media. We are people who are looking for quick solutions and quick ideas. We're not looking for a long-range effort here. This is Israel's fight. They really were the ones who were endangered, and we felt as their ally that we had to support them. Our interest in there is really about Israel. It's not about the U.S. So my question is, do we have the stomach for a longer-term engagement here? I think we're going to get tired, and I think it's going to get very, very dangerous for Republicans in the midterms if they let this go on past June.
June?
I think it has to be over by June, and the meetings with Trump and Xi, I think if it's not, those meetings could go very badly, and then you open up the whole rare earth thing again, and you open up, they're not going to be happy if we keep resources and missiles in Taiwan to protect Taiwan Strait. I think that's going to be their issue. And I think that the Iranians have given everyone an idea of, let's control the strait, the Strait of North Carolina. And, everybody now is looking at these short waterways and thinking, hey, we could control this and therefore we could cause this much pain to the global economy. And I think it's just the straitjacket of war.
Yeah, it's almost like what you see with the bureaucracy in Washington. You have Tom Tillis, who's, his one vote can stop the whole banking committee with Kevin Warsh. Then I don't know if you recall, for a while there, Joe Manchin, I feel like, was the most powerful man in America because whatever he did was how whatever legislation was going to go through. And then you also have now, like you said, a little place 2 miles wide, 20-something miles long total. I mean, it's not very wide, but those boats are big, so you can only have so many coming through there. I recall when this first started that you sent me a text and you said, did you buy more energy stocks? You were like, have you bought more energy stocks? I was like, I'm pretty much fully there. How would you, I was already, and with energy stocks, oil stocks, you asked about oil stocks, not energy stocks. I pretty much have oil stocks already covered. We'll see how it has grown. Those positions have grown, but what did you look at when it was going in there from a,
First of all, the thing I like to do, I believe that Trump would be good for energy stocks when he became president. So I told people, go long energy, whether it's a 1-year put option on, the XL, the
XLE,
sector ETF. Yeah.
XLE.
Or it's ISO or whatever it is, some of the refiners. I think that when you look at energy, the one thing I'd say to people is try to make it a long-term gain. I really think that whenever we trade, if we don't do long-term trading, meaning a year and a day, we're really taking a huge hit from the tax perspective. And that makes the return requirement of the decision you make has to be even higher. So I would say to people, I think you should stagger in. I think you should stagger up. And I think that you should be always looking to try to get to that year and a day when you're trying to take advantage of one of these market moves. And I think that will there be energy be higher a year from today? I don't think so, but I think it's going to go higher before it goes lower. So I agree with you that I think we're going back above 100. But again, if the scenario is that we do get a resolution by June, I think we might see some violence in the next few weeks. But I think there will be a lot of pressure to get a solution. And that solution will probably mean that oil comes back down because the strait is opened again.
Yeah, hopefully that strait is open within the next few weeks for sure. And like you said, positioning, people are looking at it, they say, okay, gas prices are up, so I'm making a ton of money in these energy stocks right now, but energy is a really small sector in the whole entire stock market anyway. So you'd have to have a lot of energy even to be overweight in energy to really capture a lot of this. With those energy stocks, the big ones, I generally like to think of those more, like utilities. I'm planning for the dividend. That's why I put them in the portfolio a long time ago. People are going to get gas, but these companies, you should play a healthy and safe dividend that they can cover. And then they buy back into their companies. So they do all types of things that are just increasing their shareholder value. But like you said, Mr. Steven, they're not going to appreciate at the same rate. Even if they go down from this point next year, you probably will still get in real return once you count in the dividend, something close to whatever this market is going to do,
Yeah.
Have you noticed the shift with the energy stocks now? It kind of was like metals earlier this year, how it's kind of getting memeish.
Yeah, I think the energy space is always a good source for dividends. So I like the energy space because I think that there's a lot of investors that realize it's a cyclical sector. It's not going to have continued growth and stability. It's going to go up significantly, come back down, and then it's going to go in cycles. And I don't like cycles. I like consistency, but I do love yields in the 3 to 5% level. Just as an aside, because I like to be in a live environment, they just announced that they arrested a soldier for a $400,000 bet on the capture of Maduro on
Wow.
Polymarket.
Say that again.
So,
So people listening. Wow.
so what we talked about earlier in this podcast was the idea of corruption, and to find that within the half an hour, there's an announcement of an arrest for a soldier who was involved in the Maduro planning, and he made a bet on Polymarket. Um, something about $400,000. I don't know if that's how much he made with a small bet, or that's how much he put, and it had a larger influence. But my point is that these markets, especially Polymarket, are really pretty new. And I don't think we really understand what controls are in place and what should be in place and how much I mean, the blurring of the line between what's investing and what's just outright guessing is, speculation is really becoming very, very hard for anybody to figure out. What do you think of the difference between futures markets and poly markets?
Got you. Well, you can invest in future markets, right? You can, but you can only trade poly markets. They come out and tell you that they're trading. Poly markets are very interesting. Like I said, maybe that was Samuel I was talking with from Business Insider. We were doing that. I was telling like I've never actually played the poly markets. I've seen poly markets. I see how they work. I see that poly markets are pretty good at predicting things that are happening. But when you mention something like a soldier making 400K off of an event, that could shift the poly market, and they're already knowing the events that are going to happen, So how much is causation? How much is correlation inside of poly markets? I think a bigger thing with the poly markets is that the mentality it's going to create, I think it'll cause people to gamble way too much. You know what I mean?
Right.
Like, how are you going? Because you can bet on literally anything. I know the government said they're working on things to regulate poly markets more. They what contract did they have that they took off? It was about someone being assassinated, or
Khamenei?
maybe it was someone from Iran. Yeah, it was the Ayatollah. They were talking about when they were going to get assassinated or taken out, and like one of the Kalshi or poly markets, one of them came on, was like, well, we can't have those kind of bets. Another thing with those is, so like we just saw an example of, I saw someone speaking like, what if you're at a live event, or someone who plays on the game, and you're like not even a first derivative of this person. and you somehow you just happen to come to their house before the game with your cousin or your friend. They all know each other. And you see like they're wearing red shoes that night, and there's a bet on that. You know what I mean? Like how do you even punish that person?
I don't know. I think that, the first free throw, is it going to miss? Like the first, like some of these things, I really wonder, like is it a skill? I guess that's my point. Is there a skill in determining a winner? Do you believe there's a skill in determining the winners in markets?
I believe there are definitely signals that you can look at in determining winners in markets. Sometimes the markets just do things that don't make sense, right? Like sometimes companies go up that I don't know why they're going up. Sometimes company goes down where they just reported great numbers and everything's looking good, even out in the forecast. I would definitely rather invest in stocks, equities, trades, things like that, where I can see everything, see in the backside versus playing the poly market. And the poly market is just like I said, it just seems so addictive that being there playing that stuff all the time. So but they definitely
Yeah.
point the direction of things that are happening.
I think it's interesting because people were theorizing that there was a lot of activity in oil futures and energy futures and market futures, and that was where the crime was going to be committed. And to see that it happened in poly markets, I don't know if that gives me more confidence in some of the rules and regulations around futures and options, because they are more established and they have clearer rules and they have clearer litigation. I mean, I got to think this is going to be a very interesting case of, how do we prosecute this? How do we show that he wasn't just guessing? Because I look at things and say, you can think there's something that's going to happen, but you don't know that something is going to happen, do you? If there's if you and I sit down and we plan that we're going to paint, a park in Charlotte green, and we put a polymarket event that this park is going to turn green, we could have been involved, but we're not necessarily. As it got closer, we could have just been guessing that those people were going to do this, and therefore, we're making a projection, just like a speculation, just like anyone else, right?
Right. Or even more diabolical is that you would put the poly market bet that the park was going to be green and then bet that it doesn't get green and paint it like blue. You know, that's how you catch them on the other side. Yeah, poly markets are definitely an interesting foggy thing. Speaking of foggy things and what people may not be able to see through. We hear about the fog in the markets and the private credit fog. I like to think of it maybe now as for those people who may have drank in their time before. I feel like private credit is more like beer goggles. I think that's how people are looking at the world, right? Like
I
they're
think
looking.
it reminds me of the punch bowl. There was an expression that you gotta make sure that you exit before the punch bowl gets pulled from the party. And I think there was a party where people were looking at these items that couldn't be covered by regular debt offerings and bank support. So they were supported by this secondary market. But I look today and everybody says everything is looking more uncertain. JP Morgan's in the process of setting up a new fund for private credit. So if I see the number one bank, and maybe I'm wrong by a few $billions in the US in terms of reputation, putting an investment in building an infrastructure around private credit, is it because they see an opportunity and they're going to dominate because of their name and reputation? Is it because there are really a lot of scattered and broken assets that they could pick up cheaply and then put them in their funds and then show great return when they build some more liquidity?
Bear
I
Stearns.
wonder if they see a market opportunity here, and we're missing it by focusing on the failures when we should be focused on who's going to make money from the rebuilding of private credit.
Right. You get private credit. Full disclosure. Had a meeting with some of my clients today with a private credit guy. And we were talking about it depends on what you're in, but yeah, JP Morgan and these other banks. JP Morgan's not the only bank that has a private credit fund that's building a private credit fund right
Right,
now.
they're building a new one, I guess. They're starting a new fund, which
Yeah.
you wouldn't do if you think the asset class is going down. You wouldn't necessarily be lining up your clients.
Oh, You mean like selling structured notes during the housing
Yeah.
decline, but also on the other side, hedging where you're also betting against the credit default swaps?
Yeah,
And
there's
issuing
a
both.
lot of ways for them to make money. I agree that they could be doing something that, but I always like to think that, hey, these banks are doing these things because there's an opportunity here. And I'm trying to figure out, you know, why would you put the best reputation in the marketplace at risk over a space like this, where in my mind it is still a little bit foggy? I mean, do you think it's clearing, or you think we know more about private credit now than we did 6 months ago?
Think everyone probably knows a little bit more about private credit now than they did 6 months ago, just because people probably didn't even know what it was. People who were even invested in it probably didn't even realize how they were invested inside of it. I think private credit is still going to bump some more. It's going to bump. Now, I actually did add some of the alternative asset allocators into one of my portfolios in the mix, to Blackstone, BlackRock's. Once again, not investment advice. Blue Owl, one of their funds, even actually pays a higher dividend. So stocks like that are really beaten up. I mean, private credit works for a long time. I'm not going to trade these in the next year, but maybe 5, 10 years from now, they'll be up. In theory, they should be up and to the right. I think private credit funds, I think what's happened has been good for private credit, actually. Not the people losing money, but the fact that it's been brought to the light more, because private credit was created back in the BDC, back in the 80s to help Main Street. And then it really expanded after the banking crisis when they put more regulations on the banks. So this is supposed to help Main Street. But as we always see, people find ways to make money maliciously inside anything that the government sets up. Look at some of the people who got those PPP loans back in COVID, like some
Yep.
multi-million, got a whole lot of those. So I think private credit, like I said, maybe it was last time, I think you come on, re-rate those books, tell people what the real par value is, so we can just clear this fog and let investors know what they're investing in. People need to realize that these funds are illiquid or semi-liquid at best. Don't
Right.
plan on getting your money out within the next 5 years or so. And realize that it's just a diversifier as well, right? It plays a different part inside your portfolio. Don't have everything invested in private credit.
Yeah, I think that we're looking at an asset class that is pretty small in the overall scheme of things. I think they talked about it being 1.5 to 2 trillion. And I know that seems like an enormous number, but when you compare it to the market for securities or the market for fixed income or the market for real estate, you realize how this is, the area of crypto. I think it got up to, when Bitcoin was 120, I think it got up to almost 2 trillion in crypto, but now it's, back down. And I think that when we look at these markets and these spaces, we need to take a global perspective and say, look, in terms of things, in terms of how much I should own, it should be somewhat proportional to the market cap of the whole industry, right? And if we look at that and say that puts it at a 1% position, it puts crypto at a 0.5% position. I think that's the way we should be talking about these things. And I honestly think CNBC and others do a disservice to the investing public, because we spend a lot of time talking about asset classes that 99% of the listeners aren't holders of, right? Is that doing what when they gave you the rights to broadcast, was it so that you could promote an agenda and issues that are, relevant to the average listener, or is it to try to educate and inform the average investor and the average listener? And I just feel like we've gotten carried away a little bit with the discussion of crypto, the discussion of some of these assets, because in reality, most people aren't going to own. They're not part of the story. What we want the story to be is good companies making good decisions. I think at Intel, hey, he took a situation with Trump where he went to the White House and he was going to get denied access to all these things. He convinced Trump that what you should do is invest in us and not necessarily disparage us. And now you have an earnings blowout tonight. I think what that says is, hey, there's different ways to make money. And if you're making it on Intel's new exposure and operations in Arizona and building up the U.S. capability for our chip sector, that feels a little bit better than some of the activities we saw with triple collateralized items in private credit, right?
Well, I mean, Intel is now, subsidized. They were boosted by the government. They pay the government a percentage of their returns. So Intel is a personal one for me because I've been watching that stock for a long time, just watching it go up and down, in and out of Intel personally. Had some clients in for a while now, but yeah, to see their crazy returns and their blowout quarter, I think they were expecting, analysts were expecting like 1 cent to 7 cent for their returns, for their earnings, and they per share, and they had like 29 or 30 cent per share. So it really blew out everyone's expectations. Yeah, right. So that's really crazy. And I think they reinforced their guidance for the rest of the year. We on this call, but it's just like when you see things like that, and the investments that have happened with Intel, it's an effort to onshore. So maybe once we get everything onshore with this chip production, maybe that's when the Strait of Taiwan becomes less. I don't want to say relevant because Taiwan Semi really does make
I think that's what I mean. Taiwan Semi is included in that Arizona foundry,
right.
investment. They want, but I've heard that all of the foundries there are having trouble finding labor. They're having trouble finding qualified workers and people who want to work in, a suit environment where you're going to have a mat suit on to not have any charge or not do anything to damage the chips. And so I think it's going to take time. I don't think we're going to go away from depending on the Strait of Taiwan anytime soon. But all I'm saying is it really is an area where we could be focused over here and worried about what's going on in Iran. And then, while you're focused over there, your enemies are focused somewhere else. So I think it's going to be a very interesting, June with the visit of Trump to Xi. And Xi has another term, so he's, got some more time. And I think his
She's
ambition
for life,
is,
right?
huh?
She's
Well,
for
he
life,
could
right?
probably, as
They changed
Putin
the
has
law,
found, he's able to get a lot of support for. I think he does 6-year terms, but
or is that Russia? Someone that is definitely for life now. Like they got elected for life.
but it's really a question of do they want to disrupt and gather all this energy? But if you look at it, could we walk away from Iran right now? I mean, could we just say, hey, we're going to focus our energy on in Asia, in the Pacific, and move those resources? I don't think we could, because I think that Iran would continue to control the strait and they would only let their ships through. And I'm not sure that NATO and some of the other allies are necessarily going to love the fact that the U.S. started this, created this as a hot point, and now walks away to try to solve China. It's
Oh, right. I'm sorry to interrupt you. I was going to say, and then we speak about, so we start off with the investment side of this, like investments, Taiwan Semi's investing into Intel. We have these Middle Eastern countries that, you remember last year, I think it was last year, when the president went over to the Middle East and secured all these investments, like up to $1 trillion, I think he said. How are they going to pay for those now if they're, everything's getting bombed? I don't think they've made all these investments yet. You hear a lot of investments, and then it's like, I'm waiting to see these investments. You hear investments,
Yeah,
wait these investments.
I
Speaking
think that we're going to have to wait and see on a lot of things.
right,
And
speaking on investments and things close to home, we're both down here in Wall Street South, down here in the Charlotte area. I saw again today where they're putting up legislation about building data centers. People don't want data centers built around here. So, what's your thoughts on that with the data center and just the investment by that?
look, I think our energy infrastructure is probably not ready for it. So I think we need to really think about whether we make some of these data centers self-sufficient. If you provide your own power, then I think you can have a facility. If you're going to go on our existing grid and be the main draw on that grid, then you're going to have to pay for infrastructure and development of a new grid, because you're going to make that grid less stable. I think that I wonder how small towns, like let's say you passed legislation and said, all right, they have to be energy independent. Okay, who's going to be the regulator that goes onto the facility and makes sure the server is using its nuclear fission properly? Who's going to be the one that tries to make sure that there are no regulators or use of power or use of batteries that is using dangerous materials? I think that we as a country have not really thought through how creating all of these server farms close to all of this important activity around AI is really going to lay out. I think we have ideas, but I don't think that's why I've said, as I've said before, Marcus, I'll say again, I think that we're going to have to solve the problems involved with the auto driving and self-driving. And those things will cause a disruption in our labor market and a disruption in our systems that is going to, be challenging for this country. And I think that when we solve that problem somewhat, we're going to have an idea of all the layoffs and the other things that are going to get caused by AI in the future. And so I think we have to climb mountain one before we address mountain two. I think it's really hard for us to see all of the things we don't know yet because this is all new to us, right?
Right. And you just gave like a real life case of like you said, if they build these data centers, who's going to check out these centers? That's how just technology disrupts some jobs, it destroys some jobs, it innovates some jobs. Maybe the person used to work in there now, if someone has a job that does that. How honest they are or whatever with that job, that's up to be seen. I was thinking about AI and the dominance and the technological revolution, and I mentioned on podcast before. A few months ago, I was talking about horses and cars, right? And I said, we still have horses, but we don't have very many horses compared to how many we used to have, right? The price of horses were, so forgive me with these numbers, they were either, and this is like right when cars came out, it was either like $1,500 to $2,000 for just like a good horse. And the same type of car was like $10,000. But then what cars came down, it might have been $100, $200 and $1,000, but I think it was 1,500 and 10,000, like the gap. But then Ford started mass producing these cars and the gap came down to where cars were pretty much the same price. And then people were like calculating. This is one of Henry Ford's things he was telling people. He was saying, you got to calculate how much you paid to upkeep your horse, another $100, $200 a year. The cost of cars are going to be less. So like the cost of cars came down, people and horses went away. We still have expensive AI, right? So people's jobs are still going to be there. And now if you want to buy a nice horse is going to cost you just as much as a nice car, but there are a lot less horses.
Yeah, I mean, I don't think this is all going to happen quite as quickly as everybody does. I'm more of a gradualist. I think we got to see gradual stability before people will put AI into the sensitive areas. Like I look at, what happens if I get an AI health teledoc and I get an AI response and they tell me to do something and I have a huge reaction to it. Is the medical company that use the technology going to be where I go to sue? Is it going to be the AI developer who I sue? Who's ultimately responsible? I assume the medical company has to verify it before it becomes part of their process, and they're ultimately responsible for any advice given. But I could see, just like the CrowdStrike problem, who's protecting who and who has the right to sue if there is a problem. So I think our society is going to have a little time to digest this. And I don't think it's clear where and how some of these things are going to be regulated or understood.
Yeah, it's definitely one of the big things. The regulation, how people are playing it out right now. So I know we're running up on a little bit of time here. With your practice right now, with all the geopolitical stuff going on, just how are you managing your active portfolios? How are you managing your portfolios?
I'm buying puts still on the XLK. I believe that the XLK is still overpriced in terms of technology. I think the software has corrected, but I still think there's going to be some pullback in the hardware space as well. I think that SPY puts are in place because I believe that overall the market has, too many challenges and too much uncertainty. And therefore, I think that inflation is going to be a bigger issue. I don't think the Fed is going to be able to lower. So I think that this wash is almost a non-issue because I think when he gets in, I think eventually he'll have, the ability to lower rates, but not in time for the election. I think they were hoping he gets in May. He lowers rates May, June, July meetings, and those lowerings significantly affect the economy going into the election. Now I'd say he's not going to be able to probably lower rates once this year, maybe near the end in December. And that's going to be too late to do anything significant in terms of making the affordability better for a lot of Americans. So I'd say that right now, I'm looking at things saying, I think we are at a point where you should be, in my mind, below average in your allocation to risk. And I think you should probably be above average in your allocation to dividends and income.
I know the last two times we were on here, you mentioned that you saw the market going down 10%, and it did the first time. Hasn't gone down 10% the last time. Where you seeing you think there's 10% again?
I see, like I said, the main issues are ground troops and something to go engage with China. I think both of those main issues would cause almost a 20% correction. And I believe that the recent run up has been, a false move by the market. So I think that there's 8 or 9% that is easily going to come off if things get more serious in the Middle East. And then I think there's another 10% that might come off if it involves China and technology. So I don't think it's really likely that we're going to see. If I were to guess, the S&P will not be over 7,000 at the end of this year. I think it will be closer to 6,000.
Really? Well, that's more than 10%.
I think it
Where
is,
we're at
but I
now.
think there's a possibility for more than one thing to go wrong, right?
That's like 15, 20%. That's down. That's a big move. That's more shocking right there. There you go. Wow. Okay. So you do see, so you have your puts play. But what about, so historically, after the election midterm years, the market should 20 something out, like one time out of the last 21 midterm elections, the market has gone higher. What are your thoughts on that?
I think that midterms are hard because they take the existing government that has been doing things for 2 years and they challenge them with, the idea that they're going to lose control of one of the houses. So you really need to hit the ground running in the first term of a president, in the first 2 years. And I think it's, they're in a position now where it could become irrelevant. And if the Republicans were blocked and Trump was blocked from doing a lot of the things he's doing because of the majority of Democrats, I think he struggles, and I think the economy and some of the things that he's trying to put in place permanently, I think they struggle, and I think overall the market would like the idea that there is this kind of battle and there's no one thing that's happening, because the market likes uncertainty in some ways. It likes the idea that no one has control over it going up or down. No one party.
Yeah, it likes gridlock. That might be a better way of putting it. I think the market might like actual certainty. But I know exactly what you mean as far as people are speaking. Before we hop off, let's talk about people are going into safe places they think the market. So you're going down. If you think the market's going down, but everyone doesn't have enough where they can buy options and puts, like they can't maybe do covered calls or anything in that effect. And the dollar seems to be, the dollar's been moving, crypto's been moving, gold's been moving. Where are you seeing as places to hide right now? And
I think, Marcus, that we should take the 8 or 9% move up and say things got more expensive. That was it. I made that money. I didn't defend as well as I should have last time in creating a defensive portfolio. So sell 10% of your equities and get yourself into safer things. I still believe the commodity, the story is going to be strong, gold and silver. I've also, for my clients, started to look at uranium. I think uranium and the nuclear is going to be a bigger part of the future. If you tell me in 3 or 5 years, I think the U.S. has more nuclear than it has today. So I like those as safe targets because I think they're longer term investments. I think in most cases, you and I agree that, there are some really good companies with good dividends. And I think that those companies will continue to be, the healthcare companies of the next 5 or 10 years. So I still like Merck. I still like Pfizer. I'm not recommending these for people to buy. Everybody needs to have their own tax and investment advice, but I think that stocks like that to pay 4 or 5% dividend are a good store of value and are going to probably go up, as well as giving you the income.
Yeah, that's some real solid advice. Real solid advice. I guess see if there's anything else on here. Is there anything else on here you want to cover today, Mr. Steven?
No, I think that was it. I'd say keep your eye on Z. I think Z is the key. His meeting with Trump and how it evolves in the Strait of Taiwan are really going to be a bigger issue than people are focused on. And so, what I want people to realize is we see the problems we see. It's the problems we don't see that we need to be thinking about. And that's why I like the idea of, thinking about what could happen with Taiwan, because you don't want to be having to spend a week to analyze and figure it out. And then the market's already moved in the directions you should have gone, right?
Yeah, you can't try to time the market, right? You should already be in there. Maybe just increase your position or maybe decrease your position. I guess let me ask you a couple quick questions before we go off, and you can do these. Let's say higher or lower, okay? Higher or lower. Gas prices in the
Higher,
month. Next time we meet in like a month, higher or lower.
higher,
Food costs.
higher.
Core,
Transportation of the food is going to continue to go up as oil goes up.
so core inflation, things going up.
Yeah, that's usually X food and energy, though. Are you talking about the full one or the X?
Both core and headline.
Okay, I
Just
would say
inflation
that
in general.
the headline one is going up. I'd say the core one is probably going up at a slower rate.
Gotcha.
It
And
takes longer.
employment.
I think employment in the U.S. is going to decline. I think we're going to continue to see companies who are using AI already to try to make their operations smoother and more easily implemented with AI technology.
And I guess the last big one, interest rates.
I know people are going to hate this, but I think interest rates are going up because I think the inflation will cause a spike and it will concern the Fed. And I could see the Fed not having wash in place until September. And I could see that causing, a vote at the Fed to raise rates, which I think Trump would react almost violently to. So
Yeah. And then I'm going to say some months. You tell me when to stop, okay? If this war is still going on. 3 months from now.
I'd say it will still be going on in 3.
6 months.
No, I
3,
think it
6.
will have to be resolved before the election.
There you go. All right. Man, it's been a really good conversation. I think we've definitely given people some
I think we
interesting
solved a lot
things
of
to
the
think about.
world problems, Marcus, because I think we're trying hard.
We are trying hard. Hopefully people are, because I mean, like we said, we speak about a lot of things that may not get put out into the mainstream media and people hear it, but we definitely know facts and we're giving facts to people and actionable steps that people can take.
Just came across that was a $400,000 profit he made on that Maduro trade.
I wonder how much he bet to make that profit. Either way, he probably
I just wonder what do you think he's making? He's probably making 40,000 as a troop
not
stationed
enough to
in.
make that bet. So I guess over or under 4 more people will be indicted or charged like this guy by the time we meet next time on Poly Market Bet.
Over or under 4?
4.
I'd say it's an over.
All right. Cool. There you go. A
All right,
lot of
Marcus,
overs.
it's a pleasure, man.
Thank you, Mr. Steven. Anyone, y'all got questions? Y'all need anything? Leave them in the comments. We'll get back to you later. Thanks for joining us. We'll talk to you next time.
All right, be well. Be well, people.
Be well.
All right, you've finished the first phase of this month's audit. If you're seeing the patterns, you're already ahead of like 90% of the market. People are stuck in the fog once it clarifies. And once again, we're not just mapping theory. It's something called more. It's a different way to track institutional capital and different ways to see what's working in this economy. Like I said, I got like a 2-hour video on the whole introduction of more. So if you want to check that out, it's over on my YouTube channel, Marcus Sturtevant. Senior. So, also in that, we just finished that conversation with Mr. Stephen Davenport. A lot of things happening that hadn't came to fruition yet. This next part, we jump into a live session with me and Mr. Clem Miller, a professor over at Georgetown University, and he's been inside the trading business for a while. He's also the co-host of the Skeptic's Guide to Investing with Mr. Stephen Davenport. And we go into the world where we're at, Chairman Warsh, Fed Chairman Warsh, oil, some fascinating conversations on inflation, how he actually invests inside the market, and some of the factors he's looking for as well. So actually, we should look at the Moore framework next to some of his staples and ways that he does it. It's a rich conversation. Stay tuned. Let's go. All right. Good evening. We're a little late this evening. Good evening, everyone. Welcome to tonight's live session. I'm joined by Clem Miller, and we're jumping on at a pivotal moment for the markets. Just hours ago, the Federal Reserve concluded its April meeting, and as many expected, they decided to hold interest rates steady at 3.5 to 3.75%. But the whole is only half the story. We're seeing significant tension from the FOMC, the most since 8 to 4 we've seen since the early 90s, and backdrops of almost $120 Brent crude and rising geopolitical intentions. Tonight, Clem and I are going to pull the curtain back just a little bit. It's a different vibe, a little more laid back. We're going to talk a little bit about the Powell Warsh transition, where with Kevin Warsh's nomination advancing in the Senate today, so it looks like he should be clear for the vote. Inflation versus energy, maybe we'll talk a little bit about that just to see how the PCE forecast can play out. We know energy inflation was a big part of what happened last year, or energy deflation, the deflationary pressures of energy. And then higher for longer. Why these markets hope for aggressive rate cuts in 2026 is hitting the wall. I mean, I just don't think they're going to do it. We'll see. And Clem, there's a lot of noise out there on Main Street right now, but we're here to provide this signal, man. So let's just dig right in. How are you, Clem? What you thinking about?
I'm good, Marcus. Everything is great. It's been a relaxing day for me. A nice day today on the markets. So that's good. Makes up for a couple days ago, or was that yesterday? Seems like
Yes.
it was a couple days ago.
These
No, it
markets.
was yesterday, wasn't it?
Yeah, when the market was down.
Every day brings some new volatility.
Got that right, man.
No, but I'm doing well. I'm just, watching what's going on. The Middle East situation is interesting. Both sides are playing, a cat and mouse game. So it's very interesting what's going on. A lot of countries are getting hurt by that. A lot of economies are getting hurt by what's going on with the higher oil prices. Asia is suffering. Europe, to some extent, is suffering. You had this event today, which I think is more significant than what people are attributing to it, and that's the UAE dropping out of OPEC. So I think that was very interesting. I guess some could say it's a long time in coming, but I think it's pretty significant. It shows that this so-called unity that the Gulf states has may not be all that much unity.
Yeah, the UAE's pullout definitely was something that withdrawal from the OPEC today was definitely unexpected. I think they kind of like dropped it. I guess over there it's probably like the middle of the night, right? When they dropped it early in the morning over here, or later in the evening. It was early in the morning over here. I do recall that.
And effective May 1st, so that's pretty quick.
That's Friday.
Yeah. I mean, the thing about that one is that even if you take the Iran war out of the picture, which of course it's impossible to do, but even if that didn't happen, the UAE was quite upset, has been for a long time, with Saudi dominance of OPEC. And so what would happen is Saudi Arabia was the swing producer. So basically they could control the price of crude oil. If they pumped a lot, price of oil would come down. If they ratcheted back production, the price of oil would go up. But that power was in Saudi hands, while they expected other countries in OPEC to restrain their production more or less permanently. And obviously, the UAE was one of those countries which was constrained by OPEC. So now they're no longer going to feel constrained by OPEC, and so that should be good for good for lowering oil prices once the Iran thing is resolved.
Once the Iran thing is resolved, yeah, once it's resolved, man. I think I saw gas today. The national average is like 423. Like
Yeah, it's
gas is expensive. How much is it up there in DC?
it's around DC, Baltimore. It's a lot. A lot. I actually in downtown DC, I saw it the other day. I think it was $6 or something like that. I remember it was really, really high. I saw a gas station down there.
Are you getting jet fuel?
I don't know.
Goodness. $6 a gallon. That is really high.
I mean, it was in downtown DC, so it was a lot. It was a lot of money. I couldn't believe it.
Must have been right there by Howard University. I don't know, man. That's very interesting that it's that much. I mean, I think down here, I know down here because I got some gas this morning. It's like 363 right down the street.
That's pretty cheap.
Well, when this conflict started, so for context for anyone listening, when this conflict started, it was 241, but it's definitely lower than it was at its peak.
Yeah.
So it's definitely come back down. And with that, I mean, we're just talking about, I know we're going to talk about the Fed. People come here to talk about the Fed, but like you said, this OPEC stuff dropping today. And for those who don't know, Clem is an international professor. I'll let you say what you are, Clem. Clem understands geopolitical events, right? He teaches this stuff. But what I was going to say is, so like the UAE, for example, you say now they can expand their oil production, but it's different than if they would have done this some years ago because a lot of other countries have become a lot more oil independent, mainly the USA.
Yeah. Well, yeah. I mean, the USA has obviously a lot of oil, okay, but it's not necessarily in the right places. There's a whole. It's not a situation where oil independence and energy independence are kind of vague terms, right? You may have on net more exports of energy than imports, or you might have, but it's all based on energy levels, and you're still importing stuff into certain coasts of the United States, and you might be exporting other stuff, or LNG might be offsetting crude oil. So it's kind of a whole fuzzy thing. And besides energy independence of a particular country means absolutely nothing when oil prices are set on a global basis.
Expand.
Yeah, expand on that.
Mm-hmm.
Okay, so it's not like you know, it's not like if you had absolute U.S. energy independence, or let's say crude oil independence, we couldn't have an oil price here that's like $10 cheaper than global oil. It just doesn't work that way because you're going to have arbitrage, right? It's like anything else, right? You're going to have arbitrage where it's going to make sense for oil producers to sell where they can get more money, right? So, you know, you arbitrage to a global oil price.
Interesting. And
So
I'm
you
not,
have,
go ahead.
yeah, I mean, not to get more technical than that, but you do have some frictions regarding various qualities of oil. You have some frictions regarding where the oil is available, exactly available in terms of like, is it available on the West Coast or in the Gulf of Mexico or the West Coast? Uh, and so there can be slight differences that are explained by these frictions. But by and large, there's sort of one crude oil price for the world, right?
Right. Well, I mean, you have Brent crude, which is,
Yeah,
and then you
you
have
have Brent,
WTI, and then there's
right?
even more oil than that. There are other types of oil.
Well, there's lots of different oil, right? But Brent is a composite. Okay, people don't realize that there used to be a Brent oil field, right, where you used to be able to get a lot of oil from. It was like a huge oil field, and then it basically got exhausted. And so this concept of Brent crude it's like it's like an index. It's like a composite of a lot of other crudes, and so they're all sort of light crudes, and so because they're light crudes, that composite tends to have a higher price than those that are heavier crudes.
What about the West Texas Intermediary?
The West Texas Intermediate is somewhat heavier, not really heavy, but somewhat heavier.
Is that price based on a blend of different?
It is based on a blend. It's based on a blend of oil that comes into a particular pipeline system at a place called Cushing, which or near Cushing. I guess it's either West Texas or in Oklahoma. Forget. But the composite price is West Texas Intermediate. So both those basically are composite prices based on different qualities of crude oil. And West Texas Intermediate is generally it's more referred to in the United States than it is overseas. Whereas Brent crude is really the benchmark that people talk about, overseas. So, one way to think about that is the West Texas Intermediate is like using the yard and the foot in the U.S.
I was going to say standard and metric system.
Whereas Brent is like the meter of the rest of the world, right? So overseas, you come out of the United States, people talk about Brent more than they talk about. But still, Brent, you can't. What's weird here is you can't really buy a barrel of Brent because it's just an index, right? Okay. Um, you can't buy the bottle of Brent, right? You can buy an index that tracks it, which is the Brent index, and you can buy futures and options and so on. But those are like financial instruments. They're not, they're not the actual barrel of this mix.
Yeah, not the tangible portion. You can't touch that oil. You can just buy an index. And for those,
you used to be able to buy Brent. You used to be a real oil, right?
you can go buy a barrel from your house.
But it exhausts. The field exhausted, but you're right when you said there's more than WTI and Brent. There is. There's Arab Light in Saudi Arabia. There's, UAE blends. There's Nigerian blends. There's Venezuelan blends. And all of these are slightly different based on the quality of the oil that comes out. Lighter crudes versus heavier crudes generally.
Right, and people use different kind of crude oils and gas depending on the time of season, right? Like summer has a different kind of gas and winter has a different kind of gas. Like there's so much in this gas that people don't realize.
Right. And different refineries have use different types of crude oil. So just to give you, I'll give you an example with which I'm familiar, is in the Gulf in Texas, you have oil refineries that process heavy crude oil. And where do they get this heavy crude oil from? Mostly, actually, from Venezuela. And from even more so the Alberta tar sands, right? And so that they process this heavy oil into basically into lighter based oil products. But only these refineries, among refineries in the United States, only these ones in the Gulf can do that. And that's why when you had the all this discussion about Venezuela and knocking out the head of Venezuela, Maduro, and basically seizing the oil and whatnot. The oil in Venezuela is valuable for those refineries in Texas. So that's where that comes from.
Of course it is.
Yeah.
And with the, we went and locked up the oil in Venezuela, and by locked up I mean gained control of it, and then now we have this Strait of Hormuz situation with the oil. It's a lot of oil, but they, like you were talking about pipelines, they integrated that pipeline where they're pumping it from the east to the west of what country are they pumping that across? I'm talking about the other pipeline they have out there.
You mean in Saudi Arabia,
I don't
the
think
one
it's
that
Saudi
goes to
Arabia.
The Red Sea?
Yes, it goes to the Red Sea. Yeah, it goes to the
Right.
Red Sea.
Yeah.
So they're having
So
so they're finding ways to, I guess, divert oil, but there's so much oil that we're getting behind. This stuff's just sitting in the strait. Ships are being taken. It's just it's madness.
yeah. Well, over the years, there's always been talk about Iran seizing the Strait of Hormuz. Like my entire life, people have been talking about that. And it's one of those things where after a while I started thinking, "Oh, that's just talk. It's never going to happen, right? It would have happened already had it."
Yeah.
But no, now it's happened.
Well, I mean,
Uh,
that's a big tool they got.
it's a huge tool. It's a huge tool, and they've got a lot of the U.S. Navy tied up dealing with that.
Exactly. And I was talking with Mr. Steven Davenport. We were doing a live session last week before he went away on his trip, and he was talking about the Strait of Taiwan, right?
Yes.
That's how that could be another choke point. How that could be Z could be sitting over there looking at what we have going on with Iran, and like you said, our Navy's over there saying maybe this is the chance. But I don't know. Y'all are skeptics. So I'm a little more sanguine.
Well, I would say on Taiwan that that an invasion is not as likely as some kind of blockade, right? Some kind of serious blockade. And I don't really think that China is ready to entertain that. I think Taiwan's got some good defenses. I think the United States will try to defend Taiwan, and I think Japan will try to defend Taiwan as well.
Mm. Yeah, moving on Taiwan. I mean, that would throw the markets even into more peril right now if that was to happen.
Well, it would upend the entire technology industry if
Yeah,
that were to happen.
the chips. You can't get the chips over here. Taiwan send me where they
And
make the
if you
base.
saw, and other industries too, not just technology, automotive and so on. But if we saw something like that on the horizon, uh, I think you would see me get out of technology stocks that I'm in.
That Intel you loved.
I hate Intel.
I
Intel
remember.
sucks.
I remember. Intel's been parabolic, man. Like the crazy moves with Intel this month. It doesn't make sense. It's very interesting. Well, I think we talked enough about the war over there, the oil. Let's shift a little bit more towards the Fed. Today was presumably Jerome Powell's last meeting as Fed chair. I've watched the meetings. I watch all his meetings. I watch him for his body language. Like he's not really going to put anything. Sometimes he says things that drops the market. Like he came out at Jackson Hole a few years ago, and he was extremely hawkish, meaning that he was saying it's going to get rough. There's going to be pain. That's what he said. There'll be pain. The markets went down crazy. Today he was up there. It seemed like I don't know if you watched it. Today it seemed he was up there just kind of like, yeah, it was like this is my last hurrah, but I'm not going anywhere until this Lisa Cook or until my thing's over. They asked him about Lisa Cook, and he he didn't really say anything about that. What are your thoughts on where we're at with this Fed right now, and yeah, just where we at in the Fed?
Well, a lot depends on the political legal situation that with with Powell and with the Fed, with Lisa Cook, and so on. And what I anticipate is that based on what some of the justices have said in the past, I expect that Lisa Cook will be allowed to keep her job. That's what I expect. I anticipate that Powell might stay there longer than maybe he anticipates, because I don't think the pressure is going to go away from Trump and folks. I don't think it's going to go away. So I think he's going to be there longer than perhaps he himself anticipates. I forget when his term ends,
I think he has
but
2 more years.
yeah, he may be there for all those 2 years. It's quite possible.
Wow, that's a
I,
big take. No, I don't
yeah,
know, Clem.
I don't think he wants to do that, but if the pressure continues, then he might well do that.
I mean, he's an attorney, so he knows. He's a trained attorney. He definitely knows the pressure. I think one of the points he made when he was speaking was that when he said they talked with the DOJ, but they didn't like completely give him the all clear. They wouldn't come back and try to bring this thing back up again.
Yeah, they said they might.
Yeah. So yeah, until that's like all clear, he might stay. But who
Yeah,
knows how long he's
exactly.
going to stay?
And look, anybody they don't like or are trying to put pressure on, they're going to do something. I mean, well, look at what they did with Jim Comey today. Or
What they do to
yesterday.
call me?
You remember those things, that thing with the shells and the 8647 from last year?
I
I don't know
remember
if you
they
remember.
like indicted him and arrested him last year.
Yeah, well, that was for a different thing, and that was dropped. And this time, you might remember a year ago, he was on the beach, and he claims to have seen this shell formation. I'm sure he put it there himself, but the shell formation says 8647. So now the 47 is definitely Trump,
Okay.
right?
Oh, take him out.
So the yeah, well, the debate is about the 86,
Maybe take him out.
and yeah,
The
and I mean,
restaurant.
yeah, that's what people are saying,
Exactly
right?
what it is.
And in restaurant language, it means like I don't know. What do you think it means? Take out the trash.
If you're going straight off those numbers and you say 45 or 47 represent Trump, 86
Yeah,
means like get out of here, it's gone. 86 that order. The order's gone. Right? I
yeah.
worked in restaurants, so I know this lingo. Like 86 that order is gone. So yeah, I don't. But did Comey work in restaurants? Does he know
It
that
doesn't mean
terminology?
it doesn't mean kill him.
No. Well, I mean, I don't know what he means. So I don't know. I don't think so. Why would you put that in the sand? Why would you put kill the
Well,
president in the sand?
right, exactly. And why Comey claims he never heard of 86 before.
If you haven't worked
And
in a
honestly,
restaurant,
I've never heard of 86 before either. I've heard of Deep Six. So that's what I thought, 86 might mean, but it's not. 86 means something in a restaurant context.
yep. 86 is take them out, man. If something's 86, if you order something, Clem, and you hear them say they're 86 on whatever you order, don't eat it if they bring it to that table. They meant to throw it away. Don't eat that. Don't eat that. I digress. Yeah, so, and then even aside of Chairman Powell stand there
So
longer.
they're indicting him for that as a threat to the president.
Yeah, someone else was getting indicted as a threat. Oh, no, it's the FCC and the Disney. So that thing's very interesting as well. Did you see that?
You mean with Kimmel?
With the FCC, now they're going to review Disney and ABC's license. Yeah, I think it
Right.
came from Kimmel, something he
And
said.
yeah. That's where it comes from.
Yeah, it's just,
Because this car, he doesn't believe in the First Amendment, basically.
maybe he's weaponized. I don't know. He's out there. But once again, I feel like I digress. Back to so how is,
Well, it's
go ahead.
important though.
Hmm?
Politics is important because it interferes and intersects so much with what's going on with investments and economics and what will the issues with Fed independence are all tied up with politics, right? So you can't separate that out, right? So I mean that's the big issue. That is the big issue with the Fed, whether they're going to be independent or not. It's not whether they lower interest rates by a quarter point. That's not relevant. Okay, not at issue, right? It's whether they can be independent. It's an institutional issue, not a are they going to lower rates or increase rates or keep rates steady, until the next meeting. That's like people like agonize over these dot plots. I don't care about dot plots.
You sound like Kevin Warsh. Some of the things he's going to do, right? He's going to get rid of the dot plot. What are your thoughts on the meetings that Powell gives? Because I think Warsh is going to cut those down, if maybe not eliminate them as well. Like after The press conferences after the meetings.
You mean the press conferences?
Yeah, like the one he had today. So Powell pretty much
Well,
does it after every meeting.
right. Well, I personally, I think it's better to have more transparency than less transparency. Okay, I do think it's better to do it that way, and I think there is an investment reason for doing so because if the Fed does something that surprises the markets, there could be an overreaction by markets. Okay, so it's in the interest of the Fed, it's in the interest of public policy that the Fed do enough signaling that it's not disruptive to markets. So that's from the public policy perspective. There's a flip side to that, which you and I were talking about earlier, which is that it's very difficult to invest based on what the Fed does, at least currently, because the Fed tells you what it's thinking. And it's priced in, it's baked that what the Fed is doing is baked into markets already. So it's not like you can say, well, I disagree with everybody else and I'm going to bet on the possibility of a rate cut. No, they've already told you in advance what their thinking is. So I mean, they haven't, they don't come out and say we're going to do a we're going to do a rate cut or we're not going to do a rate cut. But all this signaling from meeting to meeting to meeting and gradualism and so on, it tells you in advance what it is. So I don't think people should invest based on what the Fed does or doesn't do. Now, do I think transparency and gradualism is a good thing for the Fed to do from a public policy perspective? Yes, I do. But I don't think that one can invest on that basis.
Gotcha. Yeah, and I mean, I feel like previous Fed chairs did a lot less, a lot fewer meetings and Fed speak than Powell. And part of it may be that it seems like every governor is always speaking somewhere between, not like collectively, they're either out speaking to students, which is now televised, or on some panel, or they're just, writing a white paper,
Right.
just coming
But
out.
when you've got all these governors doing that, I think it's very important for the chair to do it too. Uh, Otherwise, it could look like, it's like the old story about the elephant, right? Where, if you look at the elephant, what is it, the blind man, the elephant, if you touch the tail,
Feel it.
it feels
Yeah.
different than if you touch the ear.
Right.
So if you're hearing from multiple or only from a few of the Fed governors, you might get totally different opinion, totally different perspectives on what's going on at the Fed, and really, the chairman is supposed to, aggregate those and give the consensus view.
Yeah. So I think you just said my point for me though. It's like if Fed governors are out here speaking in between the meetings, like, and I get that like you said, you touch one part of the elephant, it feels one way, touch the other part, it feels different, and the blind man doesn't know this is all one elephant. So yeah, that's the Fed governor, 12 districts, all these 19 people in this room having this conversation, and the chairman guides the vote, but he still only has one vote, so the chair can't come in and particularly control it. But
Yeah.
I think I heard Powell say it today, he said you need the chair to come out and, like you said, make his statement. But part of the problem is you may have, when you have other people talking, you get a bunch of mixed messages. So you can't have either the governors talking or the Fed talking or the chairman talking. You have to have like a combination of both or just the chair. What are your thoughts on that?
Whether no, I think it's good that the others talk. Okay, I just think that if the others talk, then the chair has to talk too, and the markets should listen more to the chair than to the and economists and so on should listen more to the chair than they do to the individual members.
Do you, okay, so we said earlier, or you said earlier, like that the Fed, you can't really invest off what the Fed's doing right now. Just because the moves, they really haven't done anything. They're sat still. They've been paused. They've been on hold. So inside of that, the mindset of the investor, a self-fulfilling prophecy, kind of, right? I was talking
Well, it's
earlier.
already,
Go ahead.
I mean, with all the transparency, then what the Fed's going to do is already baked into what markets are going to do. So, um, you can't, it offers limited room for being able to invest. Um, invest on, I'm talking about investing on anticipation, betting against the broader perspective, right? Betting against the market. You can't do that when the market. It's clear what the Fed is going to do, right? This is not. I mean, to use a sort of a more modern example, this is not a poly market, right? Where there's or what is it,
Kalshi.
Kalshi, where it's not a betting market where there's a binomial or a binary decision, right? Uh, it's all built in, right? So it's like a 90% chance that the Fed is going to do basically what it says it's been going to do, right? And only this sort of 10% chance that it might not. And all that, by the way, all that is because the Fed has become more transparent. It used to be the Fed wasn't transparent or wasn't transparent enough, and therefore there had to be a lot more of the tea leaves reading, right?
Right. People, you're talking about back in the days when people were doing channel checks and going to sit in parking lots. You couldn't. And vocal,
Yeah,
those guys didn't talk, right? They didn't
yeah.
speak a
You
lot.
don't need tea leaf reading now with that. So, I mean, I think just to even let me broaden this out a little bit more. The Fed basically controls short-term interest rates, like very short-term interest rates. That's what they control. They don't control long-term yields. They don't try to control long-term yields. And as a result, and it's long-term yields that actually are the influence on stock markets, on equity markets.
CapEx,
Yeah,
really.
it's the long-term yields,
Mm-hmm.
and the Fed doesn't control that. So, you have to look at markets about what is going on with long-term yields. You can't look at what the Fed does to tell you anything about long-term yields. Okay, you can't, right? Because they don't control it. Some central banks have actually tried to control long-term yields, right? And in fact, the Fed, when it you could say that when the Fed did QE, that was about controlling long-term yields. You can kind of say that, right? But not really. The Bank of Japan has actually done its policy of its zero policy of long-term yields being zero, and they've been doing that. I don't know that they may have abandoned that or partially abandoned that, but for the longest time they were keeping long-term yields at zero.
Yeah, how'd that work out for Japan? I mean, they're good now. Their stock market's, a lot of producers over there. Shout out to Japan. A lot of people from Japan actually listen to the podcast. So,
Really?
yeah.
Well, I love Japan, and and I've been there several times,
Yeah.
and we're going to be going back. So
I think you were in Japan one of the times I sent you a message. So, yeah, Japan, South Korea, Vietnam. It's crazy how many people over here watch it. Thanks. Big shout out.
uh, love Japan. You should go.
Maybe. I think it might be South Korea. I did a TV spot over there live. That was pretty cool. Uh, so we'll see. You never know. You never know. So, okay, we have, and what you said definitely is true as far as with the investing. I mean, I think people, like I said, is it a self-fulfilling prophecy when people see these interest rates going higher? And I say that juxtaposed. I was sitting with David Snyder earlier they recorded, and he was saying a lot of contrarian things. Wait till that comes out. It's going to be a good one. One thing he said is you can fight the Fed, that's really contrarian. And then he broke down like why the Fed's losing credibility, right? And one of the reasons he says with Main Street, they consistently say 2% interest rates. And then they consistently we're actually running 3.5 after today, 3.5, 3.75. So we're running way above that. And he just pointed out how business owners base their investments off believing what the Fed's going to tell them at this 2%. But then some other business owners are actually raising their prices by like 3%. That's how the inflation is creeping in. What are your thoughts on that? You think the Fed's not the signal it was before?
On inflation rates.
Just in general. Yeah, on the inflation rates. Like, because, I mean, we saw the Fed last year, the end of last year, the end of 24, they cut rates 100 points. The 10-year, like you said, they don't control it, went up 100 points. Mortgages went up.
Yes. So on inflation, you know, I always have to laugh when somebody says, "Oh, the inflation rate is 2.7% or 3.8% or whatever," right? I mean, why don't you make it to 2 decimal points, right? I mean, precision, it's like false precision. Uh, I don't think, I mean, there's the CPI, right? There's the PCE, okay? There's the CPI urban, right? There's the PCE urban, there's the CPI without energy and food, there's the PCE without energy and food. There's this new thing called the trimmed mean. Have you heard of that one?
Mm-mm.
The trimmed mean CPI or PCE, where basically they have the whole list of goods and they cut off the highest inflation and the lowest inflation ones. It's almost like a median, right? Across product categories, except they take off the tails, right? The upper tail and the lower tail.
Do you know what that number is? That's weird.
Yeah, well, look at it. I think it's called they call it the trimmed mean.
Yeah, no, I said, do you know what that number is? Like what that's
I don't know
running?
what it is.
Okay, yeah, I was wondering like what the difference in between that and like core and headline inflation, like you saw stuff pulled out. 'Cause that's
Yeah, I mean, my point is this: there are so many different iterations of inflation that it makes the whole concept kind of um, suspect, right? I mean, yeah, okay. So there is inflation, obviously, right? Inflation is higher than it should be. I think we can say that. Uh, uh, Prices are because of cumulative inflation year after year after year are much higher than they were uh, in 2020, right? Because of COVID, post-COVID expansion or recovery sent prices up through the roof, right? And they're
relief
still
checks.
going up. We haven't had a recession, a contraction, a big economic contraction that would have brought prices down. Haven't had it yet. And now we've got tariffs and we got the Gulf that are sending them up further. So, and I think from a political standpoint, now let's talk about politics here, right? From a political standpoint, people were told in 2024 that prices were too high and that we're going to bring down prices. They weren't told, "Oh, we're going to bring the inflation rate from 3% to 2%." No, no, no. They weren't told that. They were told that we're going to bring the prices of, I don't know, bananas or something. We're going to bring that down.
Eggs.
Eggs. We're going to bring the price of eggs down. And
And
so
oil.
that's what people expect. They expected the actual price to come down, not the rate of change in the price, which is what inflation is about. So I don't think I think the Fed might argue about, well, it's 3.2% versus 2.9%. It doesn't matter. It's like that's false precision in my mind.
Okay, so I posed a question.
Yeah.
I posed a question on LinkedIn today. And this is streaming through LinkedIn too. Shout out to anyone watching on LinkedIn, YouTube, anyone watching me and Clem. But one of the questions that I posed was, okay, because I feel like, and I'm tying this back to like my thought on private credit. I think all the private credit people need to just come out, tell us what they have, write off what they need to write off. What do you think would happen if the Fed came out and just said, all right, we can't get to 2. We're putting our cards on the table. The real rate is 3. Or Walsh might come out and say the real rate is 0. what do you think the markets would say then if they just because you say this Fed's only like the Fed doesn't control interest rates or doesn't particularly influence the stock market. What are your thoughts on that if they came out and made something drastic like that?
Well, okay, so this is how it doesn't control the stock market, but it does influence it, and it influences it not through rates, not through long-term rates, but it influences it because people want to believe that it influences it. So there's a belief system out there. There are a lot of people out there who believe that the Federal Reserve is like Oz.
Mm.
Okay.
The HBO
Uh,
show
well, like
or the
no,
Wizard of
not
Oz, like behind the curtain? Yeah, which one? You
behind
gotta distinguish the one behind the
the
curtain. Yeah, okay.
the Fed, because maybe they've grown up with all these like assertions that the Fed is all powerful and we should break up the Fed, or the slogan that people have heard a long time, we should audit the Fed to make sure we know what they're up to. And I mean, you've heard these things over time. Conspiracy theories, the Fed has been subject to conspiracy theories because people believe that the Fed has a lot more power than I think it really does have. It creates this imagery of a lot of power. And so if the Fed does something unexpected, right? If the Fed does something unexpected, then the markets will likely react. If only because people will think, well, the Fed knows something that we all don't know. Okay. And so we should act because the Fed is smarter than we are. And I don't buy that.
Yeah, I definitely don't think the Fed's smarter than us. I mean, they got a lot of PhDs over there. I mean, I think they get the information before we have it clearly. They know more than we know. But you like you said, is this like, go ahead.
Is this the right information to be looking at?
Is this dirty data? Yeah. So I wanted to talk about the mindset thing. We'll get back to that, but this is a good point. Like, is
And
it
how do we know? How do we know that the Bureau? I'm not convinced that there isn't some manipulate. Now I'm being the conspiracy theorist. I'm not convinced. I'm not convinced that there isn't some manipulation of the Bureau of Labor Statistics going on. I'm
Clem?
not convinced.
Clem, are you talk about Bureau of Labor Statistics? Are you young enough to remember when they used to count employment a totally different way? Like they changed the way they count unemployment. So yeah, it's probably a little different in there.
If there's a statistical basis for a change, that's fine. But the our president didn't like what he heard one day, and so he fired the head of the BLS
Yeah, I remember.
and tried to put in some kind of sycophant into the BLS. And I haven't heard what's going on lately, but do we trust what's going on with that data? I don't know.
I tend to tell people when we talk about the data as far as it goes now, especially,
Yeah.
we've had shutdowns that kind of distorted the data. We had a month where data didn't come out at all. Like that data's
Right.
gone forever, right? There was some
Yeah.
inflation data that just never came
Exactly.
out.
They weren't able to collect it. I mean, what they'll probably do is do some kind of extrapolation or interpolation or whatever, right? But
Manipulation.
yeah, it all rhymes, right? Extrapolation, interpretation, manipulation. Uh, so I don't know. I mean, I don't really. I'm not sure. We should trust the what's coming out of the BLS. If I were in the Fed, if I were in the Fed, I would be finding independent sources of information other than the BLS.
I think that's what they're trying to do. Maybe I think so. I think that's one of the big things. So Powell was elected by or nominated by Trump, as is Warsh. But I think they're coming in with two totally different approaches, right? What do you think is going to be some of the changes Warsh will make? I think like I said, I think he thinks AI is going to boost productivity and allow him to cut rates. What are your thoughts, Cliff? Powell's
I
Warsh.
I think
Warsh,
I
Warsh's
think
Fed.
I think he may be right about that. I think we're seeing a lot of I think we're seeing a lot of layoffs in technology, and I think that a good chunk of it has to do with AI. And you're going to need to lower rates in order to stimulate the economy and in order for these folks to be hired. The only thing is that stimulation requires lower long-term yields, because I don't think these short rates are going to do much.
So do you think the economy is slowing down? Or are you basing it on these
Well,
GDP estimates?
the economy is not slowing down now. The economy is doing quite, if you believe
The data.
the stats,
Mhm.
economy the economy is doing fine, and that was reflected in today's statement that the economy is doing fine, except for inflation. Labor is doing fine according to the report today. But I think what Warsh is talking about is about the future more than about the current status. And we're in an upswing for AI that is going to affect a lot of jobs. And so in order to kind of boost employment, I think that long-term yields are going to have to come down to do that.
Got you. And the reason, so for people listening who may not quite fully grasp why you keep saying long-term yields, because that's what these companies, these big companies are investing. They're basing on long-term capital expenditures and they're
Right,
tied
which
to a yield.
the Fed doesn't control.
Right.
I mean, they could influence it by, QE, right? They could lower it. They could lower long-term yields by buying a lot of bonds, long-term bonds, like they did with QE. But they're not doing QE anymore. If anything, they're doing QT,
Quantitative
right?
tightening.
Right. And so, that tool that helps to lower long-term bond yields is just not there. That's why I think the Fed is less relevant, because it focuses only on the short term, not on the long term.
Got you. What about, so if, I think one way that the Fed can influence a little bit more is if they start getting too offsides, these bond vigilantes come in. What about that thought? Because that's what really moves the stock market, whether people realize it or not, like the bond market.
What moves the stock market
Let me say it to you again. Oh, go ahead. I thought you were questioning. Go ahead. Go ahead.
No, what moves the stock market is earnings growth. That's what moves the stock market.
Well, we've had great earnings for the last how many years?
And it's helped the stock market.
But okay, so even first quarter though, we had great earnings, right? Great earnings out of the banks. The banks went down, right? Great earnings out of software. The IGV crashed. So are we past? Because if you look past the noise, yeah, it should definitely work straight off earnings. We are at all-time highs. I'm sitting here talking like we're crashing or something. We are at all-time highs. But,
Right.
six on one hand, half a dozen on the other. Six fingered
Yep.
man. Yeah, I don't know. I think, like you said, I think it's something inside investor sentiment, inside investors' mindset. When they see things with the Fed, maybe they are giving the Fed too much power.
I definitely think so. It's you got a lot of people who talk about it, and so if they did something unexpected, I think it would move markets.
Right. So
When
they're
they just do what they do without any surprise, I don't think it really moves markets that much.
so it's a sentiment thing. It's kind of what you're talking about with the
Yeah,
Fed.
it's a sentiment thing.
Have you ever heard the term psycho-cybernetics?
Psycho-cybernetics? I don't think so.
All right. So
I mean, cybernetics sounds like it has something to do with machines.
cybernetics is like motion. Psycho is like in your head, your psychology. I read this book in college. So it's like
Yeah.
cybernetics. It's from like the
Now
60s.
you're worried. Now you're worrying me.
No. It's from like this book is from the 60s. It was one of my courses. I took a course and this was the textbook the professor gave us to read. It's actually
Okay.
interesting. It talks about the power of like visualization, how you see things and it happens, manifestation, those type of things. So we're talking about the Fed and sentiment. I think people invest off of psycho-cybernetics more than they even realize into like self-fulfilling prophecies. Tying that to, so they'll say, still with the Fed, if you see the Fed come out and make a statement that would make the markets move, they're going with that same sentiment. They're going to see whatever's happening. They're going to mentally think that we should move and go down because the markets are moving and going down. Or as opposed, logically, they should just stay still or buy more.
I don't quite understand.
Psycho-cybernetics. So what I'm saying is it's like a self-fulfilling prophecy with your sentiment as far as like with your investments, the ties to the way they are tied together, right? I was saying that, so if a person loses money and they have a bad self-view of themselves, they're going to go sell stuff, right? So if you see the Fed out here speaking, you got to stay with me here. You see the Fed out here speaking, they're going down, they're saying like, these markets going to move one way or they're going to move another. Psychologically, people are going to move. It's the sentiment we saw with the Michigan report where sentiment was bad, but then the actual movement was good until it wasn't. So basically, it's just saying, like in your investing, I guess this is more for people listening, investors. Stay positive in investment, but be smart, right? Don't let the Fed or don't let what you hear make you go out and do something crazy.
Exactly. And the last, a good surefire way to lose money is to invest on what happened today and yesterday. Right? Don't let, that's a surefire way of losing money. Like if something happened yesterday or the day before and markets moved in a particular direction, don't think that that's going to last. And don't think that people haven't already invested on that. And, you may be the last to participate in that rally or whatnot. So that's the last thing you want to do is do that. No, you want to have a strategy that that you can pursue over a longer period of time, right? Now, I'm not necessarily one to say, well, you should have a strategy that should last years long. I don't believe that, right? But I do have a basic core strategy, and then I can kind of layer on macro things as things happen. But I don't invest, day trading or invest on 2 days or whatnot. I do have a lot more cash than normal now because of the higher risk.
Yeah, I was just going to ask you. First of all, I was going to say you don't have zero triple leverage, zero day options, and then I was going to ask you. I know you and Mr. Steven on your Skeptics Guide podcast. Y'all went through your portfolios a couple episodes ago. How are you positioned right now?
So I have about 50% cash.
50?
I have 0% cash.
Ooh.
Okay. But the stocks I have in the other 50% are doing so well that I have been, I think probably on 3 out of 4 days beating the S&P 500.
Combined, total return. Any private credit?
No.
Any Bitcoin for those?
I believe in liquidity, right? Bitcoin, I'm not stupid, okay?
For anyone who has not heard Clem's take on Bitcoin, you need to go back and listen to the podcast. You might not ever buy Bitcoin again if you listen to him talk about Bitcoin. Because
I don't want to get forked. I don't want to get forked.
He did talk about forking. Apparently, that's where it just duplicates his own token. That's a crazy thing to think about, and really scary.
Not many people know about that.
I had never heard of it before you said it. I'm checking our notes. I want to make sure we're covering everything we want to talk about, Clem. While I do that, feel free to expand on something.
Well, like I said, I think people put too much emphasis on the Fed. So that's one thing. I don't think people quite grasp how important the Gulf situation is. I think it's very important. And right now, right now, I don't think we're anywhere near a solution to that situation. So
Question.
I think we're going to see continued high oil prices, high gasoline prices, high jet fuel prices for months to come.
Question.
Yeah.
Yeah, because that stuff doesn't move quick. Like the prices go up fast, but they go up like a rocket ship and come down very slowly. So what's going to end first? Jerome Powell's term or the war in Iran?
Jerome Powell is 2 years off.
Jerome
The war in
Powell's
Iran,
term or this war? What's going to end first?
uh, the war is going to end before that for sure, right? I think the chance of there being a ground conflict is very small, right? The chance of the U.S. sending troops in is very small. Um, I mean, I suppose there's a possibility we could send troops to Carg Island.
How are we going to get the uranium, the enriched
Uh,
uranium? They're not going to just bring that to us.
I think it's going to be. I think what they would have to do to get the enriched uranium is just plain crazy. Okay, they'd have to build. They'd have to build an airfield uh, up near where the because they have to dig it out of the out of where it's buried.
Where they dropped the bomb
Yeah,
last year.
yeah. Presumably, unless they manage to get it out or get out some portion of it.
And we had done that over underground.
Which leads me to a. So I'm going to throw out a little bit of a scenario here. Okay.
Perfect. Throw it out.
So, the Iranians have been talking about, well, if this blockade continues or if the U.S. attacks some more, we have a weapon that we have not used before. This is what the Iranians have been saying in some of their communications. And not in their Lego communications, by the way, in their real communications.
Hmm. I don't know
The
which
Lego,
communications are which. I don't even know what Lego communication is.
right. Well, they've been sending out these Lego propaganda videos. But putting that aside, okay, there have been these real communications. Been talking about about potentially using a weapon that they haven't used before. And and so I don't know what that weapon is, but I have two guesses,
Guess.
right? So one guess, lesser likely of the two guesses is chemical and biological warfare.
A dirty bomb.
Well, that's going to be my most likely guess.
Oh,
A dir-
okay.
Maybe you read my LinkedIn post on that.
No, I didn't. I didn't know you made a LinkedIn post. I
Yeah,
just kind of thought they were the same thing.
what? No, chemical and biological would be like anthrax or
Okay.
something like that in smallpox or whatever, loaded up in a bomb, right? Uh, and blown up over some area, right? Like maybe over a naval ship, right? The other one, it would be a dirty bomb. It'd basically be the same thing, except it leaves radiation uh, rather than uh, rather than anthrax. So guess what is possible. They might take some of this 60% enriched uranium. Now remember, it's enriched to 60. We know, and they admit that it's enriched to 60%,
What's it got to get to
right?
like 90?
It's got to get to like 90 plus in order to be used in an actual atomic bomb. But 60% enriched
Yeah.
puts out a lot of radiation. And so if you stick that stuff in a dirty bomb, that's going to cause a lot of havoc. So, and as far as I know, there's nothing, there are no international treaties. There might be, right? But I don't know that there's anything out there that prevents the international use of dirty bombs. Maybe there is, and I
But you
don't
can't do
know.
chemical warfare because I feel like they stopped that with mustard gas and like mustard gas after like World War One, right? Like,
Well, there is a treaty, but a lot of countries have not signed up for that treaty. Interestingly, Iran has signed up for it, so
there
they're
you
a
go.
member of that treaty. They're not supposed to make this stuff, but I don't think the U.S. is a member. I don't think Russia is a member. I don't think Ukraine is a member. Um, and but despite who signs up for what, it's been used in the Middle East before. Syria used it. Iraq has used it on the Kurds. So it's certainly a possibility. So, if Iran has this stuff, that might not be good if the U.S. attacked them.
Yeah, if they're, I mean, there's not really anything that can catch that stuff once it falls out of the air.
Right.
Uh,
And yeah, yeah,
yeah,
and we've already seen with the Iranians that they can be asymmetric with their targets, right? They don't necessarily have to target a naval ship. They can target Abu Dhabi, right? Or a base in Qatar or Kuwait or whatnot.
places they've hit, places they hit, and they have longer range missiles now, so those things are going out even further.
Yeah.
It seems like a lot of our intelligence over there is like really outdated or just bad. I,
Well, I think it's crazy how they didn't expect or they ignored evidence, maybe is more like it, that Iran would close the Strait of Hormuz.
yeah,
Because like I said, people have been talking about that for years. I mean, true, I was like, yeah, over time I was thinking, oh, they'll never close it because they would have closed it by now. And maybe that's what they were thinking, that they've had this opportunity over the years to close it, and yet they never did. Well, guess what? Now is the time.
yeah, they definitely close in. It's definitely, and it's a small little space, like a few miles wide, not very long. It's just, but they definitely control it, and a lot of oil and capacity comes through there. It's just, it's crazy. It's crazy the power and the geopolitics. If they were to sell something like that, that would definitely send the markets down. Crazy, ridiculous. I guess, Clem, that's live stuff right there. Knock my mic down. We're talking about the Fed. We're talking about before we hop off. We just had a lot of Mag 7 earnings come out like today. Bounce around a little bit here, and so I don't know if you had a chance to hear any of them, but like Google's, Alphabet, they're up because their Gemini was used more. Meta was
That
down
is not good.
because of their capex. What do you?
Right.
And I heard, like I said, and I hate to go back to David Snyder, but that was the conversation I just had today, and he thinks AI is about to bust as a bubble, and he was basing off of capex, GDP, like the gap between GDP and earnings. He said it hasn't been like this since like the 90s, like right before the dot-com bubble. So inside that, how do you see the Fed impacting earnings? I know you said I know you said.
That doesn't,
Go
the
ahead.
Fed doesn't impact
I've
earnings.
asked you that 3 times, and you keep saying it. There's no impact. But what about what?
How do they? I
But
mean, I mean,
how do they? Is that
it,
what you want to ask me?
no, it doesn't affect earnings.
What about the
Okay,
employment side? Because if they lower rates, people might hire, right? And that's definitely going to affect your earnings. If you're
yields would have to come down. Okay, for yields would have to come down for companies to invest and therefore bring on more people. It's that simple. It has to be long-term yields or medium-term yields. I'll even throw that in there, right? It can't be short-term rates alone, right? Short-term rates alone are not going to do it.
but okay, all right. So not the rates, but like you said, what about the quantitative tightening, quantitative easing, raising
Well, if
the
you have that,
reserve levels?
then that's a different story, and you could have more investment.
Right. What What do you think Warsh is going to do with that? Compared to Powell.
With QE and QT,
Just with
I don't think he's
yeah.
going to do anything with QE and QT. I think the only time he would come back to QE is if we have a crash, recession, COVID, some crisis.
Well, he's coming into a political situation right now, a crisis as he comes in. As they're always test. I think Powell came in during COVID, right?
I don't think I think that lowering rates right now would be good for sentiment in the stock market temporarily, but I don't know that it'll actually do much on the employment front. I mean, think about it. AI, if AI is really moving the needle on employment a lot, how can what the Fed do? How can what the Fed does actually have a greater impact than what we're seeing with AI? It can't, right? AI is a long-term technological trend, and it's far more important than what the Fed does, by lowering, interest rates by a quarter point. I mean, it's just short-term rates by a quarter point.
Well, I mean, yeah, but what if AI, like we said, we were talking earlier, what if it increases productivity and then we make the wrong move with our rate direction?
Okay, so I'm not looking at it from the perspective of the Fed. I'm looking at it from the perspective of investors. Okay, so I don't, I'm not putting myself in the shoes of Kevin Warsh and saying, well, AI is going to make me lower rates. I don't, you know, I'm not interested in what Warsh is thinking, right? I'm interested in what's going to happen in markets which are driven by AI, right? I'm interested in AI driving markets. I'm not interested in how AI drives the Fed because I don't think the Fed lowering rates by a quarter basis point is all that relevant. You know,
But if they raise them by a quarter basis point, that'd be pretty relevant, right? Not like
well,
not economically per se.
sentiment,
Yeah,
just sentiment.
yeah, sentiment.
It's just sentiment.
Yeah. So you
Again, I don't believe that Kevin Warsh is the Wizard of Oz. I just don't believe he is,
okay?
or Powell.
I mean, he's been there before, so he has somewhat of a track record. He was very contrarian when what was that 08?
Yeah.
He was on the board. So I mean, we'll see. Do you think he?
Well, I know. I mean, it's useful to have. I mean, the Federal Reserve is a useful organization. You have to have it, and it has to be independent. No question about it, right? So my points are really more like about how much attention you should pay to it if you're an investor.
What about?
And there are people out there who pay far too much attention to the Fed than they should, and they should be looking at what's really driving uh, markets and the underlying economy. And yes, AI is one of those things. We're on a long-term secular trend when it comes to technology, and it's important to be involved in that. We're on a somewhat cyclical. It's not even a trend. We're on a cycle having to do with oil prices, and that's related to what's going on in the Gulf. And so you have to be mindful of that too. But short-term interest rates not as important as those things. Just not.
Got you. And people probably think that I just completely disagree with you. I'm not. I'm just bringing you the other side. What about international investors, right? Because there was a big thing with the Japan. You were talking about Japan's rate being zero, and there was a lot of alpha in between that Japan's rate and America's rate. People were trading stuff in dollars and yens. And what about that situation? You think that has any influence on earnings, right? Like the overseas companies' earnings,
What has influence on it? The Fed?
the American federal interest rate. Yeah, the Fed.
So it affects where. So what happens with, again, the difference is not so important, is not as important as the moves, right? And the moves aren't that important unless they're unexpected. So if you've got the Fed and the Bank of Japan sort of unexpectedly moving in different ways, that's going to affect,
Currency.
cash flows, because cash flows are going to move in one direction or another, and it's going to affect, the yen exchange rate in dollars. The same thing if it's the ECB or whatnot. But if everything is, if everything with central banks goes as expected, if everything is transparent and expected, there shouldn't be any unexpected moves in exchange rates.
Shouldn't be.
Not at all. Shouldn't be. That you can still have movement. I'm not saying they're frozen. There could still be movement, but that has a lot to do with, the underlying economics and not with necessarily with what, the central banks are doing. It's only when the central banks move in unexpected ways that you're going to start seeing some exchange rates move around a lot.
Got you. I mean, I mean, I'm sure you've noticed that for a while there, China was unloading a lot of American debt, right? Those things play
Yeah.
into at certain interest rates, the debt that we're paying back.
So, so China's in an interesting situation, being a non-market economy, or semi non-market, or semi-market, quasi-market.
Emerging
Uh,
market. There you go.
well, they have a they have a semi-closed capital account, which means you can't just take money out. Uh, below above a certain level, you're restricted in terms of the money you can take out of the country.
It's gated, like private
Yeah,
credit.
you can call it gated.
Yeah.
Yeah, it's kind of gated, right? If you're paying like for tuition or something, you can take that level of money out. But if you're trying to take out $25 million, that's a different story, right? And so in order to maintain a certain exchange rate, uh, People's Bank of China maintains large currency reserves, right? And historically, a lot of it has been in US dollars. And in recent years, they have been lowering their US dollar holdings, which have been in the form of treasury bills and bonds, and instead buying gold. And so a lot of the price increase we saw in gold last year was because of Chinese purchases of gold.
A lot of central banks were buying gold, right?
Yeah, you're right. A lot of them were, and China, especially because what was going on was, they see a day. I'm skeptical about this, but I think they see a day when maybe there'll be an alternative to the U.S. dollar that is somehow, quasi linked to gold, but a system that's run out of Beijing. So I think, and part of this, I mean, it's kind of this is worth a whole nother podcast, a whole nother live
Keep talking.
to talk about to talk about whether the dollar is going to be overthrown.
Is it?
No, it's a little too but it's a little too complicated for this. I mean, we should allocate a whole podcast to that.
Okay. We'll get James to come on with us. He can talk about the debt as a part two. He'll be good. But I mean,
So
go ahead. Talk a little bit more about though. Just a little bit more. You have to get deep into it.
about that,
Maybe
uh,
yeah, just about like so you said China's different. People hear all the time, or they have heard all the time. I know something I used to hear is like China owns America. China owns America. And like you were saying, they own a lot of our
they
treasury
used to say
debt.
that about Japan too.
Why would people say that? Why do people think that? For the Main Street people listening who may not understand that, it's not quite as
Why do
serious.
people say that, or why it's not true?
Both.
Well, I mean, it's not true because there's a lot of America to own, and there's not enough wealth in China, and before that Japan, in order to make that happen. Right now, it is true. I remember sitting in some offices in Los Angeles, and high up on some big tall buildings, and people would look out the building and say, look out the window, and say, that tower, that tower, that tower, that tower, that tower, all owned by the Chinese. I remember them telling me that, right? But nevertheless, you know, the the Chinese do not own a lot of America. So I think that's kind of, that's overblown, right? And they do own a lot of US dollar debt,
Mm-hmm.
but so do the Japanese, and so do the Saudis, and so does the UK, right? So there are a lot of foreign holders. And besides, you know who the biggest holder of US debt is?
U.S. debt.
Of US Treasury debt. Who's the biggest holder?
Well, he says not China, and I feel like it's going to be something off the wall, Russia.
The US.
Oh yeah,
The
we
US.
all know we all know our biggest debt.
You and me and everybody
Yeah, yeah,
else.
yeah, yeah. True, 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 true,
We
true.
all we
True.
all are the biggest holders of US Treasury debt. And as long as the US Treasury bond, 10-year Treasury bond, is the benchmark for all other debt, all other dollar denominated debt, I don't think the US dollar can be overthrown, right? I just don't, right? As long as, because there's, again, this is, great. It's true. It's a fiat currency, to use that Bitcoiny expression, right? But it's one that people have a lot of faith and trust in. You could say the same thing about gold, right? I mean, gold is just a rock, right? And yet people have a lot of faith in it. I mean, you can't say, okay, well, there's only so much gold in the world, two Olympic-sized swimming pools worth, and blah 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 and blah blah blah. But still, it's just a rock, right? And Bitcoin is just like stuff you make up on a computer, right? So it's all about faith and sentiment.
Yep, and that's what people don't realize. Like it's definitely about faith, and sentiment that the people
Faith
can pay it
in the
back.
value of something.
Yeah, that's what makes you. What will you pay me for this? And then eventually, if you're paying me too much for that, people stop paying you for that.
Right.
Supply and
But
demand.
I think companies generating real earnings, real cash flows, uh, those are, and if you're diversified, right? Because some of them will go down, right? Uh, I think is the best way to do it. It's the best way to grow your money is to invest in equities, invest in the stock market. And we won't get too much into equities here, but specifically, but because we're kind of doing macro today.
Yeah, we're keeping a high level macro. We're not getting down, but yeah, uh, definitely the best way to, well, in my opinion, like you said, be diversified, have a long term outlook, and your stuff should go up and to the right. And his diversification, as he mentioned, like I don't know if Clem explained it or elaborate a little bit more on it, but that's including international, and something that's not particularly correlated with stocks. You want that inside your portfolio. I like having that inside my diversification. And then there's certain stocks that you also own, like you can't just own a bunch of tech. That's not diversified. Like so.
Well, okay.
Go ahead.
So, my question let me turn it as a question to you. If you had, well, maybe not. If you had half your portfolio in cash, why not have the other half in tech?
I mean,
It's
one.
kind of let me broaden the question a little bit. Instead of having an all sector diversification, or all sector, all country diversification, or however you want to do it, why not like barbell or tribell or whatever your portfolio, and have you know
Growth and value? Or you mean like?
well, I'm not talking about that. So you're bifurcating or trifurcating the market, right? You're thinking that you should own a little bit of everything, and I'm not saying that. What I'm saying is you should pick the things that you think are gonna do better, and not do the others just for just for sake of diversification, right? Don't do anything just for sake of diversification. Diversify it across things that all of which you think are going to do well.
Yeah, definitely. Yeah, you can't just go
You
pick
gotta have that.
30
You gotta have
stocks.
that safety. Have that safety blanket, right? Of cash.
Right. I would say, because you did pose it as a question, if I had 50% cash and then you say 50%, I'm guessing tech, like high beta stuff, yeah, that's going to bring your beta's not going to be high. Well, it might be high. I don't know. I have to look at it depending on the stock, but why not
Your
just go
alpha
with
would be very high.
it? Could be, but I mean, it could go down a lot, right? If those stocks get hit really hard, even the cash, or is the cash, is that 50% cash enough to just hold it? I know you said you're beating the market certain days with this. What
Three
about
three quarters of days.
nice?
I beat the market
What
with
about if
S&P 500 with this strategy of like roughly half cash and half stocks, most of which are tech stocks. Got a few banks and some other things, but it's mostly tech.
okay, so you got a little bit different. And I was gonna say, why not just if you're going with like
Not all tech.
the low beta of cash, why not have like the high beta of quantum computing? You know what I'm saying? Like if that's the but you're still
Well,
picking quality companies.
yeah. Well, I've got three criteria that I primarily use, right? Uh, Low short interest, low peg, forward peg, right? And my third one, which I've been using a lot more lately, sharp rate, 1 year total return sharp ratio. And what that gives you, the sharp ratio, gives you like if you got a line that's going like diagonally and isn't squiggling a lot, right? If it's going diagonally and not squiggling, that's a high sharp ratio. And I like that kind of stock if it's not squiggling too much.
Works well with your
And it's
cash
rising.
up to the right.
And that has a high sharp ratio. So I like a high sharp ratio with a low peg. Low peg means that it's valued cheaply relative to growth prospects.
Price to earning growth. Yeah.
Well, yeah, peg, right? Price to earning growth. PE, PE, as the numerator, G as the denominator, right? And then short interest, because short interest tells you that people are betting against that stock, and I don't want to be I don't want to be long a stock that a lot of people are short.
I'm glad you brought up short interest actually, and those are actually some great ways to think about because like you said, if that sharp ratio is going up to right, that stock's moving the way you want it to move. Your price is growing into their earnings are going into your growth, like into the price. So you're actually going from growth into more of a value or balanced. You're getting earnings from that stock, and then as you mentioned, what was the first thing you said, which was the
Well,
last thing?
you can have on peg, you can have low pegs for traditional growth stocks. You can have low peg for traditional value stocks, for defensive, for cyclical. You can have low pegs. I mean, the peg ratio is designed for all industries essentially. And so some industries are going to have low PE, others are going to have high, but the ones that have high PE generally have high earnings, right? And low PE generally have low earnings growth. So this is a way, the peg ratio is a way of balancing those out. So I love to see a peg ratio below one.
Yeah, not fully
Love it,
valued.
right? If it's below 1.5, it's fine too. But you get above that, it gets scarier, right?
Right.
That's
Yeah.
the peg.
Yeah. I was gonna say, but
Short
go ahead. Short
short
interest.
interest, I like to see below two, right? And preferably below 1.5 even, right? Um, and sharp ratio, I really love to see above two, uh, and uh, and really, well, yeah, I'd like to see above 1.7 or 1.8. Two is good, and I've seen even better too recently. So, like two and a half, three. Um, but if you think about it, like let's say you're trying to create a ratio of ratios,
A
so to speak.
ratio of ratios. All
Yeah,
right.
I mean I mean take sharp and divide it by peg, and that's a pretty good ratio if you think about it. So you got something that's been rapidly rising, and yet it's still cheap relative to growth prospects.
relative to the market.
If you take Sharp as the numerator and Peg as the denominator.
So you don't have people going out here and typing this stuff into their AI and destroying their
And so
portfolios.
if you have Sharp over Peg, then what you really want to see is really want to see a number that's above 1.
Got that, Main Street?
Because a two Sharp can offset a 2 Peg.
They just balance out.
It can balance out.
In
You see what I'm saying?
returns.
So
Mhm.
if it's above 1, you could have like a 3 balance off a 2, and then you have a ratio of the two, which is 1.5. I like to have it above 1.
Combined.
And at that ratio, if it's below 1, then not. So oftentimes I'll look at that together, and those two things together.
Nice. And what made you decide to add the Sharp ratio back into your criteria? You said you've been looking at more.
Well, one of the things when I was just using Peg and short interest, and occasionally I look at beta too, but beta is really an overall portfolio thing, right? Beta is an overall portfolio thing. But when I was looking at Peg and Sharp, I didn't have like a momentum element in there, right? And I felt like I really needed to have some kind of momentum element, even while having a valuation and a short interest element. Because low Peg doesn't necessarily guarantee momentum, and neither does low short interest. Those are, defensive oriented measures and not momentum. So I like to see, but I'm not like purely momentum, right? I don't want to see momentum at levels of like 7 Peg ratio, right? I don't want to see that.
You don't want the
right?
parabolic momentum?
Yeah, not if it's at 7, right? Not if it's at 7 Peg, I don't, right?
Not for investing. If you were trading,
Right. So like how Palantir was doing like super well for a long time,
23 and 24.
but its Peg got like way out of whack. And so even though the Sharp ratio was really good, its Peg was it had a Peg of like 5 or 6, which is insane.
Yeah, that stock definitely came back down. We've seen a lot of that. We've seen a re-rating of this whole market. That's a great explanation, by the way, for everyone. And then with the short interest for the people who don't understand, like people who are betting against this stock to go down, if it actually goes up, you see them covering those shorts, so buying
Right.
back
Then
those
the stock can
positions.
go up on
Right,
cover.
right.
But I don't I'm not in that game. Okay, that's a game people play, and I'm not in that game, right? I like to I want to avoid stocks that have high short ratios
Right. Right. No, I was just explaining to people for someone that
because I'm a
probably
long,
might.
I'm a long investor. I think life is too short to try to play games with shorts with
That's
short selling.
that's quite the limerick that you just put out there for us. Life is too short for short selling. It's like I didn't have time to write you a short story, so I wrote you a long one. Like Samuel Clem. That's the story of me. Wow, Clem. We've been on here for a while, so I think maybe Main Street will let you take a break from us. Is there anything else you want to leave with Main Street
Nope.
tonight? Anyone
No,
else?
I'm fine. It's getting late.
Yeah, we appreciate you all hopping on with us. What are y'all all doing with this podcast? Where can they find you, Clem? If anyone needs to find you or they want to hear, what have y'all been talking about lately over there?
Well, with Steve Davenport, we do Skeptic's Guide to Investing. We do that. We do a couple of those episodes every 2 weeks. So I would encourage you to look at that. If you're on LinkedIn, I'm there, Clement Miller. You can find me there as well. And I welcome anybody who wants to link to me, right? Become one of my connections and follow me. I sometimes do short little posts there about whether they're about investing or about geopolitics or even about regular politics, right? U.S. politics. I will, and there's as we've talked about, there's a interrelationships among all three, and I often write about the intersection of those three.
Yep. And when he's not, teaching people over at Georgetown, I think you said the semester is over with over there right now.
Traveling.
traveling. That's great stuff, Clem. So, Skeptic's Guide, everyone be sure to check out that podcast. You can find me on there if you go way back. I'm on there too from like last year. The Main Street Meets Wall Street podcast, Clem's been on there. There's a couple episodes on there where he talks about Bitcoin. Like I said, people will never want to invest in Bitcoin again after they listen to Clem talk about it. And yeah, just like so excited to and grateful for you for hopping on here to do this live one.
Okay. Thanks, Marcus.
Thanks, Clem. Peace out, Main Street.
Talk to you soon.
We'll talk to you soon.
Bye.
Bye. Whew. Yeah, this is running. We're over 2.5 hours into the war report, and there's been so much that's just happening that we have to look back and just take a second to recap everything. Like I said, this is a live, living document type event of what was happening then and where we're at now. The old playbook, like I said, is definitely broken, and there's a new structure being built right in front of us in real time. If you want to keep up with the actionable intelligence that we talk about in between these massive war reports, you need to go over to my YouTube channel, Marcus Sturtevant Sr., or you can go check out my LinkedIn, the Wall Street South Journal newsletter over there, or my LinkedIn profile, Marcus Sturtevant Sr. Also, you can check out Mr. Stephen Davenport or Mr. Clem Miller and their podcast as well, Skeptic's Guide to Investing. If you're not interested in noise, if you just want results, that's where you go. That's what we're doing. That's what we're focused on. No rhetoric, no political points per se, like no slanted political points. Sometimes you can't ignore the outside, as it's one of the key points of the more economic, the more philosophy that I'm bringing out, the investing philosophy that works. So we're going to finish up this next part. We're going to jump in for a little while here. This is actually going to talk about, this is more with some user or some of your questions. People reached out to me that had questions. So we talk about, I always want to leave people on a positive note, even though we're sitting here talking about war happening and the economy and Americans and globally, people are feeling the pressure and the affordability is really becoming a thing for people all around the world. So here we're just sitting back and we're going to take a second and answer some of the questions. Some of them include tips for your 401k. Those are some of the questions that were asked. A lot of where do I just start questions. So we dive into that. And then also what to do with these record levels and earnings. What should I do when the S&P hits 7,500 or the Dow Jones hits 50K? Or international markets, the Kospi, or, something like that is just going, wow, what do we do? How do we invest? So sit back, enjoy. I know it's been a long one. I appreciate you. It's a little bit more to come, but this is the kind of work we have to do, Main Street. Main Street meets Wall Street. Thanks. Here comes the next part. Check it out. Oh, and if you haven't hit subscribe or like, go ahead and take a second and do that right now. Share this with someone you love. Share this with someone who needs to hear it. Here we go with the final segment for this war report. We're saying 94% collapse in tanker transits. This is the Hormuz. Geopolitical frictions become a structural tax on every ledger on Main Street. When you pay more at the pump, you aren't just paying for oil, where your assets end up and who gets control of it. And this is what people don't realize either. Your money is going to go somewhere. Maybe it's going to go to someone you don't want. Maybe it ends up going to the state. Maybe it goes to the people you actually wanted to go to. Maybe it goes to debtors. That's not the people you want to go to. What's up, Main Street? Welcome to the Global Square. Maybe 9, 10, 11 p.m., a.m., depending on where you're listening to. I'm down here in Charlotte. The Wall Street is south. Whether you're winding down your day or waking up in Tokyo or so, the scoreboard never turns off. Before we get into the math, I want to take a moment to acknowledge the friction we're all feeling. We look at the headlines and see growth, but we look at our receipts and see inflation. We hear about new records, yet we feel a growing sense of instability. This isn't a coincidence. It's the gap between the building blocks of finance and the mechanical reality of the world we live in. Second, we're going to take a look at it. The bottleneck, Strait of Hormuz. Give me a second, we'll pull it up. But this isn't theory, it's a bottleneck. We're saying 94% collapse in tanker transits. This is the Hormuz paradox, where geopolitical frictions become a structural tax on every ledger on Main Street. When you pay more at the pump, you aren't just paying for oil, you're paying for the friction of a world in transition. But tonight, we're moving beyond the building blocks. We're moving past the dating phase of investing and to the 1,300 professionals who subscribe to the Wall Street South Journal, you aren't here for a tip. You're here for a system. Also, to the people listening to the Main Street Meets Wall Street podcast. Tonight, we're performing an autopsy on the advice that was made in the headlines, from stuff I quoted with Business Insider all the way to the things I reviewed with the Wall Street Journal. Show you how to execute when the stakes are high, when the stakes are this high. Let's start with the dual reality of a winner and a milestone. Levels. Let's take a look at our screen here. And we see right here, this is the Strait of Hormuz, and this is actual live traffic. But what you notice is there's not much traffic. Like I said, 94% of this is actually closed off right now. So while you see these things, while you see these tankers sitting here, this is the little part that's holding everything up. Right around here. We've had some tankers come through closer on this side, but over here, the Iranian side, we're not seeing much movement, or we're not seeing much movement at all. And this is putting pressure on oil, like I said in the opening, and oil just presses down everyone. How are you feeling, Main Street? Are you feeling the pressure at the pump? I know gas was around $4.50 a gallon nationally. I did a deep dive into that stuff on a recent video I just released this weekend. If anyone wants to take a look, just go back and check it out on my YouTube channel. And also did a bonus podcast edition. Today, like I said, we're just looking. Look at the Strait of Hormuz. Look at where we're at. Look at how we sit right now. Nothing's moving through. And these things aren't like, this isn't just a pipeline that you can turn on and off with just exceptional speed. It takes time. There's been damage to the infrastructure over there. There's been damage to relations over there. We have President Trump, who's going to China tomorrow. He's flying over to talk to President Xi. President Xi, hopefully I'm sure they'll talk about the Iranian war. But I think one of the things that the president had mentioned, President Trump, is that he didn't want ongoing conflict. So we see today where Iran sent back a response to our 14-point peace proposal. And the president's response was that it was unacceptable. So there's not any movement there, but it does seem like both sides want to keep the ceasefire, quote unquote ceasefire. There have been shots fired. Ceasefire, they want the ceasefire to hold. We know that, like I said, this is a major economic cost to everyone on both sides and globally. So that's another reason why this meeting with President Xi could be so important. When you go over to China and you have Trump over there, and we'll see some of the concessions maybe they're making. I think I heard one of the speeches that one of the things that may be a talking point is President Xi wants Trump it's the way that we frame Taiwan's independence. We don't particularly support it or verbalize, or we don't deny it. I think Xi wants to push Trump closer to denying it. But that's just the geopolitical things. And I bring this up because as we look at the Strait of Hormuz here, me and Mr. Stephen Davenport last month sat back and we were talking about the possibility of a closure of Strait of Taiwan. And that would actually not have as much of an impact on oil as it would into the actual AI trade and chips, because a lot of chips come from Taiwan and Taiwan semi. So when you're looking at chips and you're looking at going into places over there, if there was, and say China's looking at this as a playbook for possible U.S. Conflicts or how U.S. will respond, but at this point that's just conjecture. We haven't seen anything new that points to China trying to take control of Taiwan, anything more than we've seen before. So if you want to know why your gas prices are sitting, $4.50 a gallon, depending on where you're at, it's because this stuff right here is not moving. And that's a very tiny place right there, just a couple miles wide and not very long, like 20, 21 miles wide long. So you sit there, you look at Strait of Hormuz, you see all the red stuff not moving, oil tankers not moving. So just hold on. I mentioned in the last video as well that you have oil futures that are pointing out for higher for longer. Oil this morning and earlier today was trading, right about $100, above $100, depending if it was Brent or West Texas Intermediary WTI. So that's the oil. Today we'll be talking about some of the items that have actually come up from the media. So questions, last video I was talking about questions that I've gotten from listeners and viewers. And once again, thank you. I appreciate everyone for listening and viewing solo on this video as well. Thanks for listening and viewing. But we're talking about Intel, right? Let's say, not just Intel, let's say we're past the building blocks. People want to know what they should do, where they should go. And you've established your emergency fund. Your emergency fund is fully funded. You've gotten your debt under control or hopefully completely eliminated. But you don't have to have your debt completely eliminated before you start investing. But let's say it's in the process. You've looked at your retirement accounts, as we mentioned before. You got those optimized. Perhaps you're ready to start making some trades yourself, right? Let's say you ventured into something like Intel. So I'm going to share my screen here again. And let's say we went to Intel. Intel stock just hit a record high again, right? Intel's been a crazy, crazy move inside of Intel here lately. I was speaking with Samuel Brink. Shout out to Sam, Business Insider. And one of the things that we were talking about on the morning of Intel's release, that's when it actually accelerated a little bit more, was how crazy the move was, parabolic the move was. We'll share right here, just show you the screen here. This is the article where we were talking about Intel here. So just scroll down, right? So, and this article was back in 2 weeks ago. It's set up there 2 weeks ago. And it was on Friday. Samuel reached out, gave him a call, sent him some information, but Intel stock soared. So say you had invested in the stock, and Intel was like $20 a year ago before the U.S. government got involved in. So let's say you invested in this stock or any stock kind of similar to it, because we've had crazy runs in the stock market here. Parabolic runs, just historical bull market going on right now. So let's say you invest inside of Intel and you're still in there, right? And you've seen this stock go from $20 to now, I think today it was like over $132 a share, right? So you just see Intel stocks continue to grow. You're looking at this revenue. And once again, this is not investment advice. This is not for anyone to just go out and say, I'm going to go buy Intel or I'm going to go buy whatever kind of stock because I saw it on this video. This is a literal example we're going to walk to and just talk through some things. Intel is a great example for what could happen if you have a stock that goes up a lot. Because that's what we're seeing right now. We're seeing stocks that are going parabolic. And we've seen it for the last few years. So here, Marcus Sturm, Senior SME Managing Principal at the ABC Squared. Like I said, wasn't surprised by Intel's smash earnings. Intel was set up for success. It appears that, they are the American first chip maker right now. We've seen huge investments into their company over the last few years, even beginning with the CHIPS Act back under President Biden administration. They've had plenty of hiccups. Oh my goodness, they've had so many hiccups. And now we're seeing new leadership come to fruition, right? So if you had an investment thesis, say you thought that Intel was going to go up, or let's say that you thought that Google last year was going to go up. There's stocks like that this year that you may invest in, but they can explode and you could have these type of oversized moves. IBM, there are just a lot of stocks that had these type of moves in the last year. NVIDIA is going crazy again. It's back to, but Google's pressing NVIDIA, for the largest company in the world. But like I said, you look here and it's just talking about what the CEO said, actually, the next wave AI, closer intelligence to the end user, and they use foundational models, inference for agentic AI. So when they say agentic AI, that's like an AI agent that can do things for you. This AI is doing more reasoning and not just coming to conclusions, but it's helping you find solutions. So people want to see the return on investment side AI. And this shift, as you said, is significantly increasing the need for Intel CPU and wafers and advanced packaging offers. So Intel has slid right into a perfect spot at this point to take advantage of this movement where the government has, and I think it's mentioned in this article, maybe it's not, but the government made an investment in Intel last year. We've seen other companies make investments in Intel. What pushed Intel higher to as recently as Friday was an announcement with Apple. They're going to do more work with Apple, which was also a call in an article from last year. I'm not going to pull that up because that was last year, but some potential partners for Intel, Apple or NVIDIA, things that just made sense. But at the time, Intel was in a position where it was really a dumpster fire inside that company. People didn't really want to people didn't want to invest inside that company or buy out that company. But the U.S. government invested in it. NVIDIA also invested inside Intel, and Taiwan's made billions of dollars from the Intel investment since NVIDIA's investment inside of them. So that's another thing with NVIDIA. They invest inside of a lot of these companies. So it comes back to them. Some say it's circular, but when you see returns like this, it's just kind of the nature of what it is. So once again, let's say that you have invested inside of Intel, right? And now here you are, you sit with this Intel stock. It's ran. Maybe you've even moved. Maybe you were just, you've moved to a high net worth individual. Times have changed and you just increased your net worth. Things change when that happens, right? Once you get to these points, people start worrying about different things and different perspectives. The other thing was a Wall Street Journal article that I was featured in where we talked about high net worth individuals. How do they manage their wealth? So let's say you happen to make a lot of money in Intel. And this doesn't even have to be, shout out to Lauren. Nowosky. But this doesn't even have to be whether or not you just became a high net worth individual. If you're gaining, and here's some things for high net worth individuals, $1 million. But these are things, right? You start looking at preserving your wealth and legacy, and sometimes more complex strategies. But taxes are huge. Estate planning, people want to know where their money's going, right? They want to know, they want control, they want protection, because once you start increasing your net worth, people somehow find magical ways to see you, right? So people, high net worth individuals, people who have come into windfalls of money. And I went into that a little bit in the last article or last video that I was on, and where we were talking about the Broke series from ESPN's 30 for 30. In that series, we were speaking where it was looking back, and that came out in 2009, so it was 17 years, and it coincided with this bull market. When you have that where you have that where they match up together, 17-year bull market and the 17 years after broke, they have my portfolio in there. It preached diversity pretty much, but you can go back and check out that video if you like. Another thing, so like I said here, like I told the Wall Street Journal, both Wall Street and Main Street seem to be coming together to take more look at what they own and what they're actually investing in. That was the thing that we've noticed converge. We see people coming together just to see, what do I actually own? Especially with this private credit that we're hearing lately and all the worries in private credit. We've seen so many worries inside private credit and the illiquidity of private credit. I actually have a few videos on private credit on the channel as well if you want to check it out. Private credit, private equity. But even tying back to that 2009 ESPN 30 for 30 Broke series, you have the private credit, which was suggested inside there, because private credit serves a purpose. Private credit serves the purpose of, in theory, it should be a diversifying element inside of your portfolio. It should also help with sustained returns, as they're usually the higher risk for higher returns. One thing that we did notice is that inside of that portfolio, the private credit performed not as well as the stock market, but like I said, the 17-year bull run in the stock market has been historical, but it did provide steady income. Other things inside their portfolio were real estate and also alternatives. So we've seen gold and things like that have great returns here lately. But like I said, people have been looking at where they're invested. That's been a big move that we've seen. We've seen people go back and look into where they're invested. And also what a lot of people don't realize is that you may be a Henry, right? So you may be a high earner, but not rich yet. And you're in the accumulation phase. You don't know what to do. So this may be the stage you're in, maybe with some stock. Maybe you work at Intel. You're working with these IPOs. They're about to come out. We just saw where one of those companies allowed their employees to sell a lot of their stocks pre-IPO. So some of those folks maybe, a lot of tech companies and startup companies have people who they gain a lot of money from company stocks, or a lot of people don't realize that, like, if you have RSUs that come into your compensation plan, that those actually count. Those are taxable income to you as well. So it's just a lot of different things that can increase your income, and there are different things that you can move about with it. Let's see what else we were talking about. So it just goes in some of the different ways. We were talking with the Wall Street Journal here, tax loss harvesting. I'm never really a fan of playing on, losing money or in taxes, but that does happen, and that's definitely a strategy that can work. So trust, one big thing about trust is trust really gives you control. People are really concerned about control, where things are going, where they're going to go. The trust will help you with that. Real estate, like I said, so even back then, real estate was mentioned, but now real estate's always been something that helps with your portfolio, as you see, diversify inside your portfolio, and then charitable giving. And that's another thing, the Trump baby accounts that just came out. So, and people have 529s, there are all kinds of accounts that you can make donations into. One thing with the Trump accounts that just came out, and I'm only speaking of them again now because they're about to go live in a couple months, and they just spoke on the possible inclusion of individual stocks where people can give them away inside of something like a donor advisor fund. So if you have stocks in there, and then they could give them away, and the person giving them away will receive a tax benefit. The person who gets them probably will catch them on a step-up basis, so their cost basis won't be as much, even though it'll be a lot by the time they're 18. But hopefully it grows. But those accounts were originally set up to track U.S. index funds, so the inclusion of individual stocks, and that part, the Trump baby accounts were signed into law, so that's codified. So that will require a little bit of legalese and movement to establish that, maybe an executive order or something. But if they are allowed to put individual stocks, charitable giving, and donations. And then once again, so one of the biggest concerns with estates planning, taxes, where your assets end up, and who gets control of it. And this is what people don't realize either. Your money is going to go somewhere. Maybe it's going to go to someone you don't want. Maybe it ends up going to the state. Maybe it goes to the people you actually want to go to. Maybe it goes to debtors. That's not the people you want to go to. All that's when you set up your accounts, make sure that you have all this stuff planned out in advance, especially if you're coming into new wealth, you're having life events. Maybe you just had a baby, or maybe you just changed jobs, or maybe you just lost a job. There's a lot of different situations where you need to reevaluate your personal financial situation. So like I said, and if you've gone into high net worth individual, or if you've stepped up to a higher tax basis, this is just something that you want to look at and establish. So, and then once again, strategic estate planning, so financial advisor, like myself, financial advisor. Then you also want to have an estate lawyer for that, attorney for that. So you get a greater number inside there. If you have a business, that might help you if you want to make sure that you have your business make sure you have your business transfer plan for once you pass away. Then if you want to transfer wealth across multiple generations, high taxation, financial and other property information out to the public eye, because that's a big thing. If stuff goes through probate, or if you have it just like in the general world, people can see like what you own, who you owe debt to, et cetera, et cetera. But if you have it in trust, that kind of keeps stuff private. So people do actually want trust sometimes just for the private part of it. And then contributing wealth to a charity or profit. People want to contribute their wealth to a particular fund or a particular cause, then that's one thing you can do with trust as well. Big thing to think about trust also is that it can be revocable or irrevocable. So irrevocable means you can't change it once you set it up. It goes into effect on some type of event. So let's say it goes into effect when a person passes away. When that person passes away, whatever's inside that trust happens. So if you set up an irrevocable trust and your life situation changes, like say you're married and you're no longer married to that person, and it's going to be, few things are impossible, but it'll be really hard to change it, right? Whereas if you have it set up as a revocable trust, you can go in there and make changes to it, the person who's in charge of the trust. So, and then another thing, just think about what you trust. So you have your trustor, your trustee, and your grantor inside your trust. Just different things to think about. Who's getting it, who's giving it, and who's in charge of making sure it goes where it's supposed to go. So like I said, you can have your family trust, goes with strategic gifting. And a big thing that people, let's say it here for a second, people initially were setting up trust because of this reason right here, the lifetime exemption limit, right? It was like $1.5 million, $3 million, like less than a decade ago, but now it's up like 15 million and 30 million for filing, married filing jointly. So that number's increased a lot. So if that was your reason, maybe you don't need a trust. But if you're at that level of income, then you probably do need some type of trust. If you have something, if you need to protect those type of savings or wealth that you've accumulated through your life. And then business succession plan, like I was saying. So different standards, just different life. There was a time earlier where the high net worth individuals were collecting more jewelry and art and cars and just trying to diverse outside the stock market. But we've seen here lately that the stock market has come back really strong. We see this K-shaped economy where the top percentage, and when I say top percentage, I just mean like income earning wise. Not all people are equal, in my opinion. Please let's not go down that road. I digress. But money doesn't make you a better person. Usually makes people worse, actually. But that's a whole nother story. So, and then, do high net worth individuals need different financial advisors? Sometimes, yeah. I mean, probably not robo-advisor. I wouldn't advise a robo-advisor unless you major income in investing. But yeah, you probably need someone who's going to spend a little bit more time paying attention to what you do, to your investments, and also to help you with the mindset that when you may want to sell or you may want to buy when you should be doing vice versa. You should be buying, you should be selling. And so it just depends. But as your assets increase, it can decrease your returns. So once again, remember, so we got this intel. Maybe we jumped into a high net worth level. Like I said, we're looking at articles that I've already talked about, articles I've already been included in, my actual quotes, because people sometimes want to know, like, what do I think? What they say, maybe you talking platitudes, I think is what a guy told me. And I was just like, if you ever want to see what I think about a subject, it's on the internet probably, especially if it's like a financial subject. It's out there. I've been quoting on a lot of things. So now we'll look at what happens, right, as your financial priorities grow. And this is an article by Chris Adams. Shout out to Chris Adams, edited by Jenna Cavler Whedon. Sorry if I said your name wrong, Jenna. go banking rate. So inside this article, we just talk about, and this is something, the same thing that we were talking about earlier, and there are other experts quoting inside. I hate even saying that, call myself an expert. There are other people quoted inside of this article. So I won't speak on what they said, but one thing is you definitely go from, it says, I can't say definitely, but this is there. You go from defense to offense, right? Lower incomes, your priorities are stability, but as income grows, your priority must flip. And this isn't me, this is another advisor speaking. Once again, I'm big on taxes, so I'm talking about taxes. Just make sure that the added taxes, they become more concerns. You increase your earning, you see more. And there are a couple of different things you need to know, right? Does this push you into a new tax bracket? If you're trying to get into a Roth, can you still make your Roth conversion? Income push you into different avenues to save, or maybe there's a different strategy that you need to take. And then even estate planning. So once again, it goes back, and this was Brandon Gregg right here. G's Gregg, total in his name, and he just said the more income you have, the higher the legacy you may end up building as assets grow. Plan accordingly to do estate plans to protect your assets and legacy for now and in the future. So it's just, the same things as you grow. So now you've had this Intel stock that's grown, and this was March. That Wall Street Journal article was January. So as we see these things continue to grow, and like I said, we've seen the Intel stock. Maybe you had Intel, now you've grown. A lot of Americans have been worried a lot about in this protection phase. We see a lot of people who've grown. Another thing that helped with the income was the One Big Beautiful Bill Act. So we'll take a second. It's supposed to be larger tax returns for people. I was actually quoted in Economic Times where we were speaking about this. Trump's Big Beautiful Bill. What could it mean for your tax refund? We're through tax season, but let's say you had a great return with your stock picks. Because remember, we're past the basic building blocks. You had a great return with your stock picks. Your emergency fund is on. It's just running. It's great. It's set up. It's established, and these investments are growing, right? Some of the things people were looking at, the child tax credit, you got to excuse these ads that are popping up. Once again, there are other people quoted here, tax bracket updates right here. Quoted, most Americans are expected to see some level of their taxes being cut, which means you will get a tax refund or a larger tax refund, but not everyone will receive a tax refund, even if their taxes are lower. And I think that's something that we saw a lot of that actually played out. People were the tax return. So also tax breaks, so they can be regressive, meaning people with lower tax brackets may not benefit as much. And, the bill adds structure. I was talking with Kevin Thompson, who's an enrolled agent, EA, dug real deep into the bill as well. That episode, part 1, was out this week. So if you want to hear more about that, but he goes deep into it. But like I said, the bill mostly it adds structure because there were a lot of things inside the bill as far as with the taxes, whether or not they were going to be extended. And, depending on what side of the aisle you're on, you have people saying it's going to be the largest tax hike in American history, or it's going to be the largest tax cut in American history. So depending on your view, it was either going to be the largest tax increase or the largest tax. So either the largest tax hike or largest tax cut in history. Just depends on your point of view, I guess your political point of view. The numbers don't lie, though. Another thing that we noticed is that a lot of Americans were not seeing the amount of returns that they were expecting from their 401ks, from their tax refunds this year. That was a big thing, especially based on maybe where we saw and where people were expected. So you've grown your income. You've got the basics and the building blocks down. Now maybe you've moved on to the point where you are looking to lock in the gains. You've moved into the high net worth situation where we are protecting your gains. Have the tax cuts, tax breaks, whatever it may be. Now we're sitting here with the stock market at all-time highs, right? S&P just closed above 74 for the first time ever. Back in February, the Dow had just hit over 50K. 6 things to do with your money right after it hit 50K. That was a question that was asked by the media, like I said. So we're going back and just looking at different questions and things that we've talked about already. One is stay steady. And all this isn't my advice. This is this is Taylor Kavor. I won't name everyone, but just know that I'll just mention it when it is mine. Another is to start investing, right? So stay steady. So keep investing. Don't make emotional decisions. And if you haven't already started investing, it's suggested here by Miss Melanie Mousson that you start investing. I said, you may want to consider locking in some gains at those levels. So at those levels, do not blink at the 50K because the market bounces around. The market's been bouncing around, but the market really bounces when it hits levels like that. Sometimes you see 30, 40, 50,000. Once it hit it came back down as resistance. It'll eventually get back through that 50,000, but it'll bounce up. So you have to lock in the gains. If you have gains in the market, maybe look to lock them in. And I don't mean take all your money out of the market. I mean lock them in perhaps by rebalancing. You can sell some of those winners and keep the profits or move on and reinvest in some other positions. That's some of the ways, because this market's presented a lot of opportunities since we've had the start of the war, where people can find other opportunities to invest. It doesn't just have to be AI or the Mag 7 or per se, even though we've seen a lot of returns from 5 companies. Then you say protect your assets, right? Once again, protection. As your wealth grows and as your life grows, you want to continue to protect those assets. That's something big that people look for. And then diversifying your assets, which just ties back to what we mentioned earlier. Even at 50K level, we've seen a lot of concentration inside the returns here, but there's concentration risk as well. If one of these companies misses earnings or pulls back capital expenditure, something to that effect, we can see a swift move back down to the other side. And then consider your overall playbook, of course. So just think about where you're at and where you're at in life, where you're at with your budget, your investments. Where do you see yourself going? Where do you see yourself at the end? You got to begin with the end in mind. So, and once again, like I said, don't blink. Do not blink. The 50K level is one that the market's bouncing around. Same thing when it was at 7. I don't know if people remember, it went back down and we hung around in the high 6s for a while. We even got down to the low 6s before we ran back through 7,000 here recently. We'll see if that holds, but that's just another thing for investors to look at. So with the 50K, we've seen you grow, we've seen your investments grow, and now you've reached this 50K level. Another thing that investors have been concerned about lately is having enough money to retire, in different ways to do it once you are actually retired, and once you've reached your level of retirement. How can you go about maintaining your level of your standard of living that you've already established, exceeding it, meeting the goals that you've worked so hard to reach? Like, how can we do this as people in general? Because we don't work hard to not be able to enjoy the fruits of our labor. That's not why we work. I think I'll add to the end of this video, we'll add the building blocks. I keep mentioning that people should already be past the building blocks. Not should be, but maybe if you're already past the building blocks and you're watching this. But if you're not past the building blocks, at the end of this, we'll have the building blocks that you should check out. It's about 20 minutes. You can just check out and go see. And that's where we talk about emergency funds, the purpose of emergency funds, importance of emergency funds. Also, you got to have balance, and you got to have budgets. You got to have a mindset shift. You got to figure out a way to eliminate debt before you even get to this stuff that we're talking about with these investments. Before you even worry about the Dow Jones hitting 50K, make sure those retirement accounts are set up the proper way, pre-tax versus after-tax. You're contributing up to the match. So just things like that. These are different things that we need to establish. And like I said, I'll put that at the end of this video as a long continuation of this video, just so people, in case you want a refresher on the building blocks, if you want to go back and take a look just to see where we're at with the building blocks.
All right. So once again, here we are. We've accumulated this. We've made this move with Intel or whatever stock it was that you did that grew this windfall of cash. And once again, it could be a growth in wealth that you just didn't expect, and now you're not prepared to do anything with it. So here is another article from last year, some strategies to maximize your 401k balance. It's actually another article, like I said, that I'm doing look backs for articles that I was actually quoted in. This one right here was in U.S. News and Money. So 10 strategies to maximize your 401k balance. And once again, this is mine. We're all about actionable steps. So I want to give you some actionable things that you can take a look at. People always ask me, like, what can we actually do? These are 10 things that you can look at doing. Not all my suggestions, and everyone is at a different stage, different place in retirement or coming to retirement, but here are some things that you can look at. And we'll just start, some of the big key takeaways. Know your vesting schedule before you leave a job. That moved a little quick. Uninvested funds may be forfeited. Max out your contributions. Check out, see what the Roth looks like for tax-free income and estate planning. Watch the expense ratio of funds your own in the 401k. I think that was a point I made, was the fees, and diversify investments by factors including asset class, sector, and tax treatment. So let's just take a look at some of these ways here. And you see right here, 10 ways to maximize your 401k. Save more than your employee's automatic savings rate. So a lot of 401k plans, when you go in and set them up, they'll start you at a level, but they'll automatically increase it, maybe 1% every year. But this is saying, right, so let's just go ahead and start at higher than that level. And in general, like I said, and I put this in the last video, if you want to find a baseline 10 to 15% total, this is what you can save. That's a good level that you can start at, begin. And a thing that you notice is once you start saving, and it's going to be like working out. So you'll feel the pain at first, but once you get through that initial pain, you'll see the growth, and you'll want to do more. You'll want to save more. You'll want to invest more. It's just cause and effect. Get that 401k match, stay until you're fully vested. So what that means is sometimes when you work at a place, you have to work for like a year before maybe the 401k match kicks in. That's not vested, but that's to get the match. Or maybe you have to work a year to get whatever you put into your 401k. And sometimes those things will come in to be fully vested. Maybe it'll take 5 years. So you'll get 20% of it the first year, 20 more percent of it the second year, which would be 40%, 20% more the third year, which would be 60%, 20% more the fourth year, 80%. And then by the fifth year, it'll be 100% fully vested. And that means whenever, even if you leave that place, the money that you've put in the vested amount is yours to take. If you're not vested or fully vested, you lose some of those benefits. Maximize your tax break. So that's how much you're going to put in pre-tax versus after tax. And then as far as when you're retiring, make sure that you have it set up so you're not paying Uncle Sam a huge amount of money in taxes as soon as you retire. Diversify with the Roth 401k. If you put it into a Roth, ideally, in theory, not even in theory, and ideally, if you put it in a Roth, you leave it in there until after age 59 and a half, and you've left it in there for the expected amount of time, over 5 years generally, you can take the earnings out, growth-free or tax-free. What your contribution amount, whatever you contribute in there, you can always take that out. But you will pay a penalty. You may pay well, if you're already in retirement age, you won't pay a penalty for early withdrawal, but you will pay taxes. But that Roth, that's one of the good things about Roth is you can potentially set up where the money you put in, but you'll pay taxes when you put the money in converting it to Roth, but that money could potentially grow tax-free. It will grow tax-free. Don't cash out early. Put that 401k money or whatever kind of retirement account you have, put that stuff away and forget you have it. Just let it grow. Don't take out money if you don't have to. Sometimes you have to take out money. Sometimes there are good reasons that don't cash it out though. Cashing out means taking it all the way out. But sometimes there are good reasons to take out money. Sometimes life hits you with something hard, extremely hard. Sometimes you are buying a house and you can use your 401k as part of a down payment, but that's as a loan that you can pay back. You want to pay back, take the loan from yourself. You hear people all the time talking about taking loans from themselves or being their own bank, but the 401k is kind of one of those things that you can do and use that for your down payment as a home. A rollover without fees. So yeah, some of these places when you do a rollover, if you have an old 401k and you go into a new account, a new provider, they may charge you a fee to do it. Minimize fees. So like I said, and I'll scroll down and show you, but that's where I was talking about these 401k plans. People think my 401k, I don't have any fees inside there, but if you look at the actual funds, there's a fee. Diversify your assets, and then remember that your required minimum distribution is going to come one day. Another thing with Roth, if you put inside Roth, that helps with the required minimum distributions. You control it more. Like I was saying in the beginning, you got 3% generally with most 401k plans, but sometimes they're different. And if you can do more than that, especially to start setting yourself up, obviously financial advisors, find one, especially from the estate planner's perspective, get your 401k match. Stay until you're vested, so leaving early. And I'm just not going to reiterate everything I said. Maximize your tax breaks, but I do want to point out the part where I was quoted. Then you have tax breaks, so like the government's way of telling us all what is important for society. That's not me. That's a management coach over at TIA in Charlotte. Diversify within Roth. Okay, was a suggestion that don't cash out early. And then here I do remember, so minimize fees. Find investment options with low costs. Stocks do not have fees. But ETFs, mutual funds, and the custodians who hold your funds do. Read the fine print. And then diversify your assets. I said a lot of Americans are worried about running out of money. That's one of the things that a lot of people seem to be struggling with. I don't know if they'll have enough in retirement, but you take these moves and they'll help with some of the volatility. So those are some actionable steps that you can take right there, 10 actionable steps. And of course, there are plenty more that you could take. Let's scroll back up to the top. Just want to read that list of 10 again. So once again, 10 ways to maximize your 401k account. Save more than your employer's automatic savings rate. Get a 401k match. Stay until you're invested. Maximize your tax break. Diversify with a Roth 401k. Don't cash out early. Roll over without fees. Minimize fees. Diversify your assets. And remember required minimum distributions. So, and these are things that you can take a look at this stuff today and see where you're at, where you fall, where you are in this whole spectrum. So actionable steps right there. Just remember different things that you can do. Another thing that we've been talking about, like I said, people worried about retiring, not having enough to retire. People have been worried about the debt, big concerns around the debt here lately, whether we can service this debt. The debt recently reached 39 trillion, but that's increasing about every 150 days, add another trillion or so. The thing with the debt is the servicing of the debt. That's about $160 trillion. People aren't really taking into account how much that cost is going to trickle down to Main Street. So when it comes to debt and how much we're paying for the debt, that can have an effect. I want to look at this Economic Times article. What were we talking about with the one big beautiful bill? So like I said, this session, we're talking about if you got this income, just trying to answer questions and user questions that I'm getting from journalists. So I'm responding to those questions as well, just saying if you were to come into a influx of income, different things, different moves, different strategies to do. And we're basing off of, and once again, these are hypotheticals, but I was quoted featured in an article of Intel. So say you were investing in Intel, which just finished right under $130 a day in closing and trading, and you invested in Intel at $20 or something like that, because that was realistic where it was, or even if you got it at the beginning of last month when it was higher than $20, but it still had a ridiculous move to the upside. So we've talked about if you've got that money and you start to move up into a high net worth or higher net worth, because if you invest enough in Intel, or even a little bit, you may have changed the tax bracket. Talked about tax implications a little bit as far as that goes, how high net worth individuals want to protect what they have and worry about taxes. But this stuff always also plays down to us on Main Street. It's not just for the quote unquote wealthy or rich people. So once again, we're all about actionable steps. This is an article where we're talking about the ways that retirees should adjust their investments amid the Iran war. We look here and we see this was just a few weeks ago, back in April. This was written by Chris Adams. Big shout out to Chris. Chris does some good stuff writing. So that basically, very sensitive, volatile area that has something to do with the war, i.e. oil, or something like that right now, or something that could be disrupted. You may look at ways to lower your risk. Once again, these aren't all things that I've as long as with lowering the risk in your portfolio, maybe you should look to move into some income producing investments. That may be a good decision. Even in retirement, you still need stuff that produces income. You want maybe a low cost ETF, or maybe even an index, one of the good ways to have some skin in the games if you're so worried about everything inside the market right now. So you don't have single stock exposure. You can maybe smooth it out some with an ETF or a fund or mutual fund that takes the total market. So it goes up and it goes down. You don't have to deal with that volatility of a single stock or a single sector, unless you're investing in a single sector ETF or a single sector index fund. But just a general overall fund that captures most of the market can help with that, especially if you're retired. Don't rush into quick decisions. This is another advisor's advice. So it's important for retirees not to make any hasty decisions when it comes to their investments. And that goes for not just retirees. That goes for anyone investing. These are hard-earned money. This is your hard-earned money. Take a second before you spend it, right? Think before you spend it. We're not saying don't spend money. Of course, you work to spend it. You work and you use money as the tool that's meant to be used for. So for someone who's already retired and drawing on their savings, the concern's a little different than for the younger investors. Exactly. And that's Taylor.
So then another option we see, you consider locking in gains or consider keeping extra cash outside of your investments. So why would you want to keep extra cash outside of your investments? There are a few reasons why you want to consider keeping cash outside of your investments. As they point out here, having some cash outside of investments, especially for a retiree or someone close to retirement, provides a little bit of breathing room. One of the big things, as I've mentioned a lot of times today, is that people who are close to retire or are retired are worried about running out of money or not having enough. So having cash, even though you may have a fixed source of income coming in, a little extra cash or outside cash can provide the breathing room that some people are looking for, and just help them with their SWAN, sleep well at night plan. That's what we want to help you create, a sleep well at night plan over here at the ABC Squared. But we want people to understand this, even in the wartime that we have going on, because we just saw it from the end of March until now. There were opportunities to buy in. There are probably still opportunities to buy as the market goes higher, but the market will come back down again. But it'll go back up again. That's just kind of the nature of the market. That's why markets work better when you focus on time inside the markets, time in the market versus timing the market or trying to time the market. And then once again, lock in some gains. Like no one's ever went broke taking profits unless they just spend it all. That's a whole nother part of it. But if you weather storms and you need cash, you can lock in some of the gains from this recent rally, right? Not all, but some trim. Not all. I'm not saying get out of the market. I'm never going to really tell anyone to get out of the market. Let's have a deeper conversation if you think you need to just get completely out of the market. But as I mentioned earlier, you can rotate into other sectors. There'll be opportunities to buy some stuff that you thought was maybe too expensive before. But trimming some of your winners and guaranteeing profit is rarely a bad move. That's just one thing I've realized. It's rarely a bad move. So here we are. We're sitting here just to reset where we're at Main Street. So we've increased our cash somehow because we've made it past the building blocks and the basics. We've talked about some of the tax problems that you may see. What happens as you move up in income, how people want to protect their money as they move up inside the income levels. Some of the things that attack people's incomes and some of the concerns. Oh, also 10 steps that people can use to increase or maximize their 401k, whether that's retirement or right now. And then also that we took a look at 4 ways that the retirees can look at 4 ways that retirees can adjust their retirement accounts amid the Iran war. So we have a war going on right now. And those are just some of the steps that they can take. It's been a full session, but there's still a little bit more we want to talk about today. I just want to thank everyone for listening so far. Everyone over in Japan or Vietnam or South Korea or Argentina, especially all my folks over here in America, the United States, Europe, the United Kingdom. We have people all over the globe who are actually sit and listen and watch this stuff. So we appreciate it. Hopefully it's making you a better investor, better at whatever it is you're doing, helping with financial literacy. That's a big part. So if you're finding value in this, hit subscribe, hit like, share this with someone. That's going to help grow this channel, help spread the message. Because, in my daytime job, I actually have a financial planning firm, the ABC Squared, but this is different. This is to help spread the message, to help let the world know. We have crazy times going on. We see the stock market going up. Oil prices are going up. Like I said in my last video, that those things probably shouldn't coincide right now based on what we have going on. Geopolitical tensions. I think today the president said that the ceasefire is on life support. The ceasefire or the negotiation talks are on life support. So there's still a lot going on. I just want you to stay informed. Hopefully we can help you stay informed. Hopefully I can help you with your budgeting. If check out video, I got some Monarch Money tool that we can help you with that you can check out if you want to try it. There's a link that I can provide you with. Free link, it'll be in the description. Full disclosure, if you do use that link, or if you use any link that I provide, you see we're using some Riverside stuff here that we record on. I also have a link there. Riverside link is for 1 free month. Try it out if you want to. And then the Monarch Money link is for 50% off the first year or 7-day free trial. If you use either of those links, I may be compensated for those links. So just putting it out there, just so you know, full disclosure. But this is Money Mindset, Main Street meets Wall Street. It's all tied in. Big shout out to all the people who are subscribed to the Wall Street South Journal. I do really appreciate the 1,300 listeners and readers who've checked out even the last newsletter that came out where we were talking about the Broke series. That's me taking a few minutes to give a shout out and thank y'all and really appreciate everyone who watches, who listens, who participates in the discussion. We covered technical rotation and the tactical defense. We laid out 10 steps to optimize your 401k and 4 pillars of protection for navigating this conflict with the Iran war. But as we close the ledger tonight, I want to leave you with the most important part of this broadcast. Everything we discussed, the Intel resurrection, maybe from the Business Insider article, the retirement warnings in Newsweek, and the high net worth standards in the Wall Street Journal. It all relies on one thing. It relies on you. You take these steps, but you're not open to operate with, you're still stuck in the Main Street mindset identity. You're fearful, reactive, and addicted to the pursuit of the next big thing, FOMO. You will eventually override your own best system yourself. So just remember to stay the course. You can outperform your own self-image. Yes, you have to see yourself as the strategic partner to your wealth, not a victim of the global friction we see at the Strait of Hormuz. We started at the Strait of Hormuz. We went through the walkthrough of gaining a windfall, perhaps from Intel. We talked about the taxes. We talked about the implications. We talked about the worries and fears of people close to retirement, steps to take to improve your 401k, and some steps that you could possibly take to help yourself right now in the Iran conflict. Once again, this stuff's not investment advice, and each person needs their own personalized advice. But $39 trillion debt clock is still ticking. Those tankers are still anchored. But tonight you have a little more knowledge. So you don't just watch the video. You can take a look at your 401k when you have a chance this week. If you think about adding crypto or private equity, take a look at the loan video that I have on my channel. Set that roster. If you're a retiree, take a step to make sure that maybe some of those 4 pillars work for you or maybe they don't. But make sure that you're not set up in a zero scenario where you can lose everything. Make sure you're covered. And then join the community. If you want this level of dissection, we do a lot of stuff pretty often, put stuff out. You can subscribe to the Wall Street South Journal on LinkedIn. 1,500 plus professionals who've decided that the Main Street and Wall Street finally need to meet, and they're going to meet on our terms. We're building a table, right? You can give this 5-star review. You can subscribe to YouTube. There's so many things you can do, but the first thing you do is just get that momentum going, one step in front of the other. And if you're listening to this and you're like, where are those building blocks? We'll leave the building blocks at the end of this as a bonus. I'm Marcus Durbin Sr. Keep your head in the mouth, your heart in the process. Main Street, heart meets Wall Street smarts. I'll see you. Thanks for tuning in. And there you have it. We spent over 3.5 hours documenting this reality. And now you can look and see how this more economy and the diplomatic shifts from the Abraham Accord to the raw operational bottlenecks of our global infrastructure. From Straits of Hormuz, Straits of Taiwan, Kevin Warsh's confirmation, all the way through his finally being sworn in. That's actually in the More Economy Report. But if you stayed through this entire report, you're no longer a casual observer of the markets. You got a different kind of blueprint. You have a different understanding that in 2026, the ticker may be merely noise. But if you can look inside of a framework, perhaps the More framework, the flow of massive capital, the reality of this sovereignty floor, right, that we have from these governments, and the synchronization of earnings. It's only the truth in the matter. And there are other factors. All it does is end when the stream goes off, right? This thing keeps moving. This ledger keeps moving. Like I said before, if you want to keep listening, if you want more stuff from me, or anyone, like I said, Mr. Clem, Mr. Steven, they have the podcast, Skeptic's Guides to Investing. Main Street Meets Wall Street podcast. It's my podcast. Some great guests on there. We have Mr. David Snyder on there, one of the most recent ones. He's predicting an AI bubble burst, and he's got some great facts for his theory. We also have a lot of great guests coming up on there. So listen to the latest episodes. We go deeper into these specific breakdowns that we didn't get to cover in this marathon. Like I said, make sure you subscribe to the Wall Street South Journal newsletter. Check me out on LinkedIn. You can see a lot of stuff on there. It's much more real time. Notice the world is shifting. This new infrastructure is being laid. Don't just watch it happen. You got to allocate accordingly. Right? I'm Marcus Durbin Sr. This has been this edition of the War Report. It's a long one. Thank you for tuning in. Hit the subscribe. Share this with someone you love, someone who could benefit from this. Main Street Heart meets Wall Street Smarts. Thanks for tuning in again.